Delegates, today we have two sessions, two technical sessions. First one is an standard and auditing of 240. Second one is 450. And first one, CAD Premnath sir is going to speak on SA 240, and he's from Hyderabad. And second technical session on SA 450. C. Aniket Talati from Ahmedabad is going to take on second session. And we are going to start in 2 minutes. I required all the delegates to join. And very importantly, I request all of you to please join on time and request you to not to post any name or membership number in the charts. And your CPRs will be given in the attendance on Zoom login details. And any questions, please post in Q&A. Thank you. Over to Secretary.
Yeah, thank you, Chairman sir. Now I am requesting Chengal Reddy, our SIR's member, to act as the session chairman and introduce the today's speaker, please, with your address also, sir.
Thank you, Secretary. Central Council member C.A. Dayaniva Sharma, the branch chairman Macharao, today's special guest, I can say C. Murali Krishna sir, past SIRC chairman, and the other managing committee members, Vice Chairman Deepak, past chairmen, and today's speaker C.A. Premnath sir, and viewers of the today virtual webinar on auditing standards. A pleasant good evening to each one of you. Welcome to the second day of virtual webinar on 4 days refresher course on auditing standards organized by the WASP jointly with peer review board, hosted by Hyderabad branch of SIRC ICI. The audit minimum guidance for the auditors, which will help in determining the extent of audit steps, how we have to do the audit, and the procedures that will help, and how to apply to fulfill the audit objectives. The auditing standards is like a yardstick against which the quality of the audit results are evaluated. The standards definitely will enhance the quality and the relevance of audit practices. It provides consistency and comparability on the audit in the reporting mechanism, as well as it provides uniformity and standardization of practices. It will help to strengthen public confidence in auditing and assurance profession. If we follow the standards, it will help the professionals in case things go awry. The responsibility is on the auditors to prove that they were not professionally negligent in performing their duties. A significant responsibility cast on the auditors on under regulatory framework. The documents helps if any questions from regulatory authorities like SEBI, ROC. In case of regulatory issues, the auditor defend the position that work was done in proper manner, which will help in dispute resolutions between the other shareholders, partners, and it will improve the brand image, the brand name. Will follow the auditing standards properly. Today's speakers, C.A. Premnath sir and Aniket Talati, the Central Council member, will definitely enlighten on the key audit considerations where everyone needs to be followed properly. Coming to the present task, introduction of today's speaker, it's my privilege to introduce today's speaker, C.A. Premnath sir. He is a fellow chartered accountant having a DISA diploma course and specialization on FAFD. Bachelor of Commerce from SV University, Tirupati in the year 1987. Presently partner of MSc Ramchandra & Co. Chartered Accountants, Hyderabad. Handled professional works on internal and external and forensic audits of large manufacturing, infrastructure, software, PSUs, companies, bank central statutory, branch statutory, concurrent and revenue audits, income tax representation, including international taxation transfer pricing. He involves in design and review of standard operating procedures as a part of SAP implementation audits. He used to give a study and review and the audit of internal financial controls of PSU, listed large manufacturing and private limited companies. Carried out forensic assignments of MNC and large manufacturing companies. He is also a peer reviewer and ICA, FRRP, technical reviewer. He is a resource person for ICA for its seminars and training sessions. He is also a visiting faculty at various government institutions and banks. With this brief introduction, I request today's speaker, C. Premnath sir. Sir, the screen is yours. You can start your sharing your technical presentation on essay 240. Thank you, sir. Thank you.
Thank you. Thank you very much. Thank you very much for your kind words of introduction. Respected senior members and council member Daya sir, and then other branch and regional council members, the senior members on the panelists. At the outset, I thank branch for giving me this opportunity. Let me go into my presentation. The topic today is Essay 240, Auditor's Responsibility Relating to Fraud in an Audit of Financial Statements. Slightly, the number is placed in a different order. On 420, we are talking with 240 on the business. So it's a disclaimer that the content of this lecture has not been specifically discussed by the council or institute or any of its committees. The views expressed herein are not necessarily represents the council or any of its committees. It's my personal experience. So we know one saying in Telugu that we say, it's a very standard word, Vyaparam Droha Chintanam, meaning the probability of fraud is more in business. That's where the professional skepticism should lie in. So the objectives is to identify and assess the risk of material misstatement due to fraud. This is the objective of this section 240. So for identifying and assessing the risk of material misstatement, two important factors we need to have. One is professional skepticism. With professional skepticism, we should look out for fraud risk factors. So the professional skepticism is the state of mind which is ready to grab that out of the errors and all. So this professional skepticism is a general sense. I can say if I'm well tuned for arm's length procedures, then this professional skepticism is easy to absorb. Meaning, if I step into the shoes of businessman, then professional skepticism is easy to understand. And that is what our auditing standards also say about SA 250, laws and regulations governing business. If I'm able to understand that, then my knowledge of professional skepticism is increased. Then I can easily able to find out the errors and I can grab out. However, there are fraud risk factors which indicate maybe the presence of fraud. Those are events or conditions that indicate an incentive or pressure or to commit a fraud or provide an opportunity to commit fraud. I'll come back to that with specific instances and all over a presentation. So first objective is to identify and assess. That is, one should have a professional skepticism. To have that, we need to have an experience or to step into the shoes of promoter and think as if I am a promoter, so that my arm's length knowledge is also increased. Next is to obtain sufficient appropriate evidence about the assessed risk of material misstatement through design and implementation of appropriate responses. That's what exactly Changal Reddy sir was talking about. He says when you encounter an inquiry from the statutory regulatory authorities, you should be able to demonstrate that you have actually tried to identify and tried to assess the risk of material misstatement. So I have to demonstrate this point A. To demonstrate point A, point B talks about how do you demonstrate point A. How I can demonstrate point A is with documentation. That's what exactly Changal Reddy sir was talking about. He has spent quite a lot of time in explaining that we need to have some documentation in place. And that's what yesterday's session is all about, the quality control process is all about. So the second point is, how do we have a sufficient appropriate evidence gathered to support that I have done this? Yes, I have carried out, I have documented. Now I am facing a fraud situation wherein there is a material misstatement. Now what should I do? Should I report or should I withdraw? There are equal arguments on both sides. You can withdraw if it is permitted. You can report as per the regulatory framework. You can go ahead and report. That's what, this is a simple session that we are going to talk about. So I'll not go into in depth. I'm just trying to put all that various issues into one place, because if I have come to a stage of chartered accountant, meaning I have already done my due research in the studies, I have understood what it is. So it is again said in a lighter way that we all know, as a Telugu people, we all know that Hanumantudi mundu kuppigantulu, meaning that I am not trying to train Lord Hanuman as to how to jump and somersault and all, because he has crossed 100 miles of Lanka in a matter of time. So it's something like, if I am talking about, if I say that I am trying to educate members on fraud, it's something like Hanumantudi mundu kuppigantulu. But however, given me a task, I'll just put all these things into one order so that we can revise these things. So for the point of professional skepticism, for arm's length, it's not me alone who can try to prevent crime. So let's see who takes the responsibilities for crime prevention. Let's understand what a fraud is, so that I can skip out safely when I'm encountering a fraud. That is, I should look out a way out. Then the director's responsibility statement or management responsibility, I'll take it from the director's responsibility statement. You can read it as management responsibility, because as per section 143, it's the director's responsibility statement. I'll come back to that. Then auditor's responsibility, then compliance to standard. This is what we'll see in this session. So this is what I'm trying to talk about, who prevents crime. When crime is present at last across in the air like corona, then who will prevent? Then whose responsibility is it? If the total air is completely polluted with crime, what is that I and you can do? So let's see that those issues that at large, at the global level, I'm looking at from a global level. At a top gravitational level, I'm just looking at, not at the ground level. So where are the responsibilities for crime prevention? Is it the company? Is it at the company level or at the government level, local government, or higher? Where is it? What stage a country has reached in developing its prevention capacities? At what stage is it? It's not able to prevent. Morning, I was just looking at the Jharkhand, one of the hospitals in Jharkhand. The people, they are just walking in and walking out into the ICU as if they are walking in and walking out as like an NTR Park or Indira Park. It's just like that. They are walking in and walking out. High intensive care. If that is the case, then who is responsible? In what way we have? So what exists already in terms of components of strategic approach, laws, policies, departmental. Now we see when we make an error, a hue and cry, when government itself has fudged its when government itself has fudged its accounts and CNDG is shouting at the top of screen, and the governments like Telangana and the governments like AP, when CNDG has blasted left, right, and center on the modification of their accounts, fudging of their accounts and all, and where is the point? What are the laws and policies looking at there? Then what are the major crime concerns the country has wishes to tackle? What are the main vulnerable populations, greatest risk of crime? What are the main areas of concentration of crime problem? Having said all these things, let's see this. So to answer all those things, one needs to have this information to answer that country's overview information, including data sources and legal frameworks. What legal frameworks we have in this? How many bank diversion fraud cases are prosecuted as on date when there are more than 2 lakh crores? When 2 lakh crores of frauds, bank funds are diverted, how many cases have been booked? For that matter, when so many companies, directors are involved, how many directors are prosecuted as on this particular date? None to my mind. So existing national prevention framework and capacities, state of provincial strategies of capacities, local strategies, and so on and so on and so on. So at the top level itself, it is polluted. Now we are facing the toughest time today because of over enthusiasm in the regulatories, that they are just trying to pull the auditors into it. So the only way for us to skip out from that is only documentation. Let us see the recent example, which I would like to spend a good amount of time, because there are questions, I think even yesterday, that if I am a small chartered accountant, why do I need to maintain documents? But let's see how the regulators are behind us, the way in which they are questioning, with a case that is on hand today. Yeah, this is for the past 3-4 months, I have been talking in every forum about this. Wherever I'm asked to speak, I'm just taking this as it's something like a Prardhana Slokam. I'm just talking this. The NEFRA, in one of the case, on one of the big fours in the world, they have used a serious language, which I'll spend quite a lot of time on this. And that will make us to understand the importance of documentation, the importance of, I said no, A, B, and C, the importance of B, what Changaleddy was highlighting. The key assertion that is made in the paragraph is that audit was conducted in accordance with standards. The second paragraph of our audit report, we say I have conducted my audit in accordance with generally accepted auditing standards. But if during a subsequent review of audit process, who will review? Today, NEFRA has reviewed it. Now, CNDG will review. IT people are reviewing it. GST people are reviewing it. So many people may review this, and then if it is found that some of the audit procedures detailed in SA were not in fact complied with, I'm saying that I have complied with SAs, and there are more than 20 account auditing standards. I'm saying I've complied with all. But when I've seen that when someone has reviewed and that review shows that I have not documented anything, then that amounts to, it says that amounts to a deliberate false declaration. Deliberate in the sense intentional. The word fraud is derived from the intention itself. Intentionally, meaning this is the word, this is what I'm trying to say, how the way in which NEFRA is wording this deliberately false declaration is made through this statement, because their observation on the audit procedures and documentation is not according to the standards. And I'll come back, where all in 173 pages, they have described, they have read, they have noted down every paragraph of the auditing standard to say that the audit was pathetic. And this is what their review here. NEFRA has extensively studied IT process platform and so on and so on. Is complete disregard to basic principles of IT security use. This makes audit documentation completely unfit for the intended purpose. This is the language NEFRA is. Let us see this. Now I've just noted down I have just noted down from that 173 pages, each page number where they have said that SA 240 is not properly, they have failed to, let me just disclose, because the kind of the sharing that is allowed to me here is an independent file sharing is made available, given to me, which is very tough, because if a total screen desktop way of screening is given, that is very easy to navigate into different files. But I think there is a limitation in this screen sharing. So I need to close one and then again I need to open again. So that kind of difficulty will be there. So you need to bear with me. While be shifting here, there will be some amount of inconvenience when I do it. So please bear with me. So let us just go to this essay 240 page 80. This will be an answer to those who have asked that I am a small firm, should I need to maintain document? Let us look at that. I'm just trying to share that document. Am I sharing the Word document, sir? Am I sharing the PDF document, please?
No, sir. PDF document is not visible.
No?
No, PDF is not.
Okay, I have to stop sharing the PDF, PPT, and then again start sharing this. Okay. So there it says page number 90, I have read it. So let me go to the page number 90. Yeah. So this is where, yeah. Sorry, page number, I think, one moment. So page 80. Yes. I think I'm sharing the file. I think I'm sharing the PDF file.
Yeah, it's visible.
Yeah. So this is what Nefra's observation. The audit firm has colluded with company in fraudulent and wrongful disclosure of accounting policies and forming part of financial statements. Now, like this, I can show you all these pages. I will share this PPT, and I will share the, you can download that because that document is not a privilege to me. Anyone can access that Nefra. You can just type Nefra ILFS in Google, you'll straight away go to that document. And for your easiness, I'll share the document so that you can look at the way they have used it. Let me go back to the professional skepticism we have discussed about it, which is a part of essay 200. So I'll go back to the page number 73. Yeah. So you can see here, it is observed that the audit has not been conducted with professional skepticism in accordance with para number 15 of SA 200, and it lacks overall objectivity of independent audit and conduct of audit in accordance with SA 200. Audit firm failed to perform responsibilities for framing an opinion, SA 700, paragraph number 10, 11, and 12. Like this, I'll just stop this for a while. Let me share. Yeah. So like this, you have these many places they have described. Mind it, when they have written this, they have gone through each and every paper. That's what I again refer, the Changal Reddy was referring to. And this is, to my knowledge, this is the first time since independence that a regulatory authority started viewing the working papers in such a depth, quoting whatnot. If one authority has started doing it, then this will follow by almost all the authorities who look at the audit papers or they'll start questioning in the same way. Yeah. I'm talking about the professional skepticism. Now, look at what Supreme Court has said in Amrapali case. And this document is not a privilege to me. This is also widely available on the net. Now, I'll take you to that document also now. Let me stop this and then. These are all on the fraud related only. Yeah. So the page number given there is page number 3. Now it says Supreme Court has said in that in a forensic report which was approved by them. Then it says the group was using tally till so and so date by all group, and then it started frequently changing. And configuration of ERPs have not been properly implemented. Yes, we have faced this in one of the forensic audits. The SAP is not configured properly. They have configured it intentionally to see that the reports are not generated properly, or they have not configured in such a way that the reports come out properly. I've seen 2 places. We all think that, like, earlier days when we go for bank audit, we think that interest is computerized, no need to check in that way. All till we have seen this, till such time we were under the impression that SAP means it is cakewalk, no need to bother about configurations. But we have seen, and you can see here, it is intentionally configured in such a way that the data can be hidden so that the configurations will not affect their reporting and all. Now, again, it talks about auditors and all who are involved, and you have non-genuine purchases from suppliers. Now we have something called professional skepticism. Now, when I'm auditing, when I'm facing this kind of data, wherein it's talking about cement purchases, then a lorry number, so-and-so lorry number with so-and-so weight on so-and-so date, gross time of gross weight, time of tear weight, it's only just 5 minutes. In 5 minutes, 30 tons of cement has been unloaded. And you can see within 10 minutes, the same vehicle comes back again with filled in. You can see here.
Sir, kindly share the link, sir. PPT. I think they are not. It is not visible.
That is okay. One moment. Yeah. Okay. This is the problem with. I think this module we have a problem in Zoom module.
Right now, this is.
Yeah. Okay. Sorry. So I said. So this clearly indicates that Changal Reddy is listening to my lesson. Okay. Now I'm just going to the 3rd page where accounting package. I said they are commenting on the way in which the accounting package is structured and used. Meaning, I as an auditor, if I encounter this kind of things, that I need to see that I need to ask a lot of questions to them as to why this has been changed. Then non-genuine purchases, there are examples given here. This is what I was explaining. A truck number so-and-so with so-and-so weight on particular date with time gross weight and gross tear weight. Within 5 minutes, this is getting unloaded of 30 tons. So this documents will not be available. Will this be available to an auditor, first of all? Should I look into this? Will this form part of my risk assessment procedures? Should I look into this? I say yes. When it comes to the risk assessment, when it comes to the risk assessment procedures, the inward procedures from procurement to pay, as a part of at least the internal financial controls documentation, I do what can go wrong. That study, I'll cover that little later in the last part.
Premnath sir, sorry for interrupting. Voice is low, sir. Can you little bit near to the system?
Okay.
Thank you.
So what can go wrong? Risk means the other definition for risk is what can go wrong. So what can go wrong study is nothing but an internal financial controls study, where I'll again flash that institute study material is well defined, designed for those process walkthrough. So as a process walkthrough, as a part of SA 315, again, internal financial controls is a baby of SA 315. SA 315 is the mother of internal financial controls. So anyhow, tomorrow Mohan Levy sir will be talking about it. But still, as a part of that, that is an assessment procedure, risk assessment procedure, which I carry out. As a part of that, if I would have arranged the data, then if I would have seen this, then professional skepticism should have raised, and then I should have asked these questions, and then how is it possible for 4 minutes, 3 minutes, 2 minutes to download an amount of 31? And this is what is raised by the Supreme Court in Amrapalis. And then you have bogus expenses and cash surrendered. Many of the clients where we we find a lot of additions in the agreed additions for whatever reason, returned and appealed, whatever reason it is. But still, in this case, you find a lot of such instances where cash is surrendered. And you have, and this is again 116 pages, 116 pages of judgment of on the Amrapali forensic report is a part of it, and it's a very good document for analyzing what is the role of a chartered accountant with respect to the SA 240. Yeah. So let's go back again. Let me go back to my presentation again. Yeah. So I've talked about the experiences that are there in the market now. Who is looking at, who is now very serious on the auditors we would have sensed now, and then what will protect is only the documentation of my procedures. Yeah, going forward. So introduction to the fraud. So what is fraud is defined in each act has their own way of defining it, but in all the essence is acts committed by a party to a contract or by his agent with his connivance with intent to deceive is very important. Intent to deceive, if I am able to establish as a chartered accountant through my professional skepticism, through my experience, then it's a big issue for the auditor again to take it forward to a logical conclusions. So to induce a person to enter into a contract is what Indian Contract Act. Then Indian Penal Code, again Companies Act has defined, Income Tax has defined, GST has defined, Customs Act has defined. So many places this has been defined, but for the purpose of audit, as per audit again, SA 240, the same wordings are used. It says an intention by an act by one or more individuals among management, number one. Two, those charged with governance, like CFO, director, or whatever, and even employees, or even the third parties, involving the use of deception to obtain an unjust or illegal advantage. This is what I said. Unjust and illegal advantage is arm's length price. So that's what I said. If one can able to understand the arm's length pricing, arm's length situations, then it is easy to get the knowledge of professional skepticism, through which we have a hint as to how we can go ahead in dealing with these. Now we have seen in the earlier places also how that unjust or illegal advantages are, how employees will do it. Like we have seen in one of the forensic cases, the employee was paying checks to the wife of employee, like 20 lakhs, 30 lakhs as consultant. And later on, it came to light, and then they have charged. And after 5, 6 years or 7 years, that case was solved. And now, whether it is a fraud where a chartered accountant can look at, when some payments are made to the wife of an employee, the chartered accountant doesn't know that it belongs to an employee, meaning the company doesn't have a policy in place to take the declarations of the persons as a good governance. Now, when we go into the next slides of role of management in preventing frauds, that is a management's principle. Now, we also, if company says we have put in, if we have put in place that policies to prevent fraud and all, they make an assertions. I, as an auditor, should verify their assertions and the audit trail for those also I have to document. So when an employee has transferred, diverted funds of 10 lakhs, 20 lakhs and all, then when it goes to the court, then they have a lot of questions. When the person who has signed the check and he's a director, he has pleaded that I don't know, the delegation has been given to him. A lot of questions have come in. I'm saying that with lot of discussion, if you are trying to prove after long drawn process, if you are trying to prove that it's a fraud, I think that auditor doesn't have any responsibilities in that. But when I say that I have looked into the internal financial controls, when I have reviewed the internal controls, when I say risk of material misstatement have been evaluated by me, to what extent, what questions I have asked is a biggest challenge that we need to face. In the same way, a third party, wherein it's a dealership, um, they have agency, and that agency deals with medical equipment, small medical equipments, and it has to be delivered across the country from one of the points in South India. So while doing so, the transporter, what he has done is he has delivered, he takes 150 items in one truck, and on the way he has been delivering to multiple locations, but he has charged freight as if he has delivered a small piece to individual. So if in one truck 30 deliveries were made, instead of raising one bill, he has raised 30 bills as if 30 different consignments were made it. And this could not be verified. The management was also blindly passing the bills. Management was blindly passing the bills. But this has been highlighted. There was again connivance in the employees who are involved in it. And is this a fraud? And is this a failure in the management, or is it a failure in the audit? Is something our documentation, our way of documenting it will prove to what extent I have failed as an auditor. So these are, I'm saying again, unless I step into the shoes of promoter and think as a part of arm's length, then these issues will not be resolved. So as a part of that, I've just mentioned this suggestion as a fact, that which is not true by anyone or who does not believe is to be true. That's again arm's length again. So active concealment of a fact by one having knowledge or belief of the fact. Concealment is intentionally you are hiding the information. So if something intentionally hiding an information, now how best my questioning skills to take out? Now questioning skills is again, am I crossing the line of audit of blood owned and going into the forensic is something again a highly debatable point. And then a promise made without an intention of performing it. Then again, the biggest in all these things is intention. Now I have to break open the mind of all these people and read the intention. That's not possible. But yes, we all know about the black box approach. From the output, we can able to find out the process and input. In the same way, we all know that the face is the index of mind. In the same way, the transactions, looking at the way in which it is designed, probably I can find out the intent. If that is so, if I'm able to find out and sense the intention, probably I may have to do an extra legwork in audit procedures to find out more. That's what we have done it in this issue where multiple bills were parked for the same consignment. We got a doubt when we have listed the part-wise consignments. When we have taken part-wise consignments and seen it, then we could able to find out, yes, there's something wrong in that. Meaning, it all depends upon the SA 520 again, analytical review procedure. Again, that NEFRA case, they have questioned the analytical review procedure of that auditor, and they made one point that your analytical procedures are pathetic. So that's one thing. What I'm saying is, when I say that I am complying with auditing standards, if you can make a small study through your article students, which we have done it long back in our office, we have seen all the 30 account auditing standards are repeated 30 times in all the auditing standards. I'll show you at the end of this presentation. I'll take you to the SA 240. The word SA 240 is used more than 100 times in all the auditing standards. Similarly, SA 520 is used. Similarly, all the auditing standards is used again in all the auditing standards. That's what the NEFRA has taken into account. Why I'm saying so much on this is that it's not one standard alone. So documentation is a combined effect of all the standards put together, and that's how the regulatory authorities have started interpreting, and that's how we also do it in the income tax. You take so many sections to protect our client. We take so many GST, income tax, and all those interpretations to protect them. And the same way of interpreting has come on to us today, only taking the auditing standards. And that's the reason why I'm just trying to repeat again and again about this standards compliances. Coming back again, fraud is again explained. I don't want to again go into these things again. However, I would like to say one thing here. However, incompetence or negligence in managing a business or even a reckless waste of firm's asset by speculation in stock market, for example, does not normally constitute a fraud. This is what is judgment. Again, I say when you look at the SA 240, the two things that we need to keep it in mind: is it a professional skepticism? Is it professional judgment? Both should travel like a parallel line. Both should travel. So you can't jump to a conclusion. In a lighter vein, I say, when my article students, they normally when they observe some deviation, the word they use is "I found," as if he was asked to find out, excavate something. He comes and says, "Sir, dorkindi, sir." I think that's a bad word to be used by the article students. But however, I'm saying, meaning that bent of mind is put into the auditor's mind right from the article days, that they use "I have found," and I've seen in many internal audit reports and those places also they write "we have found." I think that's not a word to be used. Okay. However, the point what I'm trying to say here is, there are two important things that we need to look at. When I look at the professional skepticism, I should also look into the professional judgment, what I'm going to make based on the facts of case, because it is again intention. It is again intention with respect to the arm's length again. So this is again, so who can defraud? So once if I'm able to understand, then my professional skepticism is understood well in this. So who is defrauding whom is given here. You can see here, there's a company, and then you have shareholders, competitors, government, employees, insurance, vendors, third-party owners. Meaning what I'm trying to say here is, the risk assessment can be at any place. So in all these places, I need to see that my documentation clearly talks about I have excluded the possibility of committing a fraud or error in all these places. I don't want to read out this big screen to waste your time when I'm sharing the presentation. But I'm saying in all these places is bound to be an impact of financial statements, material misstatement because of all these issues. And in the fraud definition, we have seen management, employees, outsiders. You have all these things captured here. So all these things we need to keep it in mind while we deal with the documentation. Yeah. And this is what three issues that have been explained in our SA 240. One is page 31 of SA 240. It has given the pressure and incentives to meet the deadline, to make sales quota under the gun and all. And this is not new. Even GST officials and then income tax officials are under pressure to are under pressure to make high fancy assessments. And of course, their intention is something different. But still, because they are doing it for the government, for the public purpose, they are never questioned. That's a different story altogether. But still, in employees also, we have a deadline to meet sales quota and distribution and so on and so on and all. So that gives a pressure. Now, I need to look at as an auditor while I am documenting, is there any pressures being kept built up? And if so, those pressures are real, and how I have to validate all those is given under page number 31 under SA 240. I'll just take you to that. Then opportunities to override, write-off, revenue recognizing, then all the auditing standard issues. Then rationalize, then we say the sound reasonable, I deserve it, we think it's good because the market is like that, we have to do it. And then that is the page number 38. And page 31, page 37, and page 38, which talks about these. Let me just take you to that so that I'll just show you where it is, page 31 and then 37 and 38. I'll go back to that document and then revisit this. So this is SA 240, page 31. Yeah, this is, sorry, 35 it is. Okay, this is the fraud risk factors, what we have seen, that three issues we have seen: high incentives and pressure. Then we have opportunities. Then we have attitudes and rationalization. All these examples have been given here. And we have enough cases on these things. This is at this is on page 35 of SA 240. So one or two I'll just read out. High degree of competition, we have said, or a market saturation accompanied by declining margins and all there. Then high vulnerability, rapid changes such as technology is changing. We find a lot of information technology related frauds in that, and then banking frauds and interest rates declining, and then high pressure to lend more loans and so on and so on. Like that, you have all these instances have been given, and I said, I'm only compiling it into one place. This is known to everyone. I am not trying to read out all this now. So these are profitability and trend level expectations of investment analysis. Again, they say we should get this much of EBITDA, and we have seen the listed companies talk about for valuations EBITDA. So their focus is only to manipulate that they get that figure, so that they can talk about multiples, price earning, and so on and so on. When the management is seriously talking about those issues, that is one indication or a red flag that they are trying to manipulate, and that's where we need to look into our audit procedures and all. What audit procedures? I'll come back a little later to this. So this is about SA 240 on these issues. Let me just again stop and go back to, yeah. So these are, and again, in the same way, page 37 and 38, I've already shown it to you. These are the issues. So these related ones, fraud, pressure, we have already seen these issues. Opportunities are related party transactions, complex transactions, the complex way of structuring. You send money to US or some countries as if you are opening an office there, or as if you are opening a subsidiary company there and all. And that money goes there in expenditure there, the investment is inflated, and again that from their amount comes back into India as a part of you have built something to your subsidiary company, and the money which has gone out as a part of investment will comes back into India again, and that amount is again shows as a profit, and then manipulations and so on and so on. I have not gone into all those ways of fraudulent activities, because in Hyderabad there were a lot of uh, discussion on the fraud related sessions by many good speakers like Sharat sir and all. We had very many sessions on how fraudulent activities take up and all those. But I'll not be repeating all those. But however, I will say what kind of professional skepticism, what kind of documentation will prevent us from exposing to the um, regulatory inquiries, and also from that point of view, we are having this discussion here. And then the attitudes and rationalization, the ethics, earnings manipulation, top management turnover, and so on and so on. All these issues, we need to keep it in mind while documenting, while our as a risk assessment procedure. And these are various types of frauds, and how to carry out audit in these. If to highlight these, our auditing SA 240, SA 240 has given an exhaustive checklist to look into all these aspects, the corruption kind of thing, misappropriation of assets, fraudulent statements, which I'll cover in the next slides again. How accounting standards are manipulated, I'll cover when I talk about the management point of view. So for this, how do I look into what kind of checklist I need to put in? I'll not read out all those checklists. As I said, I'm just trying to put everything into one place and distribute to you so that it becomes easy for us to understand. So let me just take you to the page number 42 to make you understand this. Let me again stop and then share that page which talks about this is so possible audit procedures to address the assessed risks of material misstatement due to fraud. And you find visiting locations or performing certain tests and surprise and unannounced basic like inventory verification, which is a part and parcel of our audit procedures. Like even we talk about this in Caro and all, requesting that the inventories could be counted at the end of the reporting period and so on. You find so much of data given in SA 240 at the end of the thing, at the end of this, and how we need to look at for revenue recognition, what kind of auditing, what kind of checks you need to follow is given here with examples. I'm not going to read out all this. I'm just trying to say this is where it is, so that if there is a discussion, then we can open this and then start discussing. If I start reading, it will become only, you may at the end of this session, you say I've only read out a certain part of it. So to avoid that, I'm saying here, this is where this data is given, and then I am trying to put that into one place in this document. Yeah. So I've given you here, and I've attached this. This can be, you can use it as a ready reference for it. So I'll cover the financial statement manipulations in one slide. I've put it into place. Then, so these are all those fraudulent ways like cash, and then skimming, inventory and other assets, fraudulent disbursements, and all this. Shell companies, ghost employees. We have seen in one of the software companies there are ghost employees. It's surprised to see these big companies, software companies, go to the as they want to recruit campus recruitment. They go to the companies. They take their KYC, they take their 10th class certificate, PAN card, or whatnot. All those things they take, and then they go to the banks, some private banks, they want, they have an incentive pressure of opening more accounts. Now they go there, and these management, they give their phone numbers, a set of 100 SIM cards, you can easily get it. And then they link all these things, and they open accounts, they transfer money as a salaries, and they take out and they invest that money into black money, into real estate and all. And of course, it's highly difficult to detect this. But however, if my intention is not to detect them, my intention is only to look at but however, if you see a pattern of account numbers to which the salary is transferred is in an order, the account numbers are in serial number, that's how we came to know that this issue. Okay, I am again saying, it all depends upon the analytical review procedure. It all depends upon the way in which you look at the data. The way in which you look at the data, it all depends upon the investigating mind or the audit per se, whatever. So these are, for all these fraudulent, for all these issues, how to carry out, there is a detailed checklist given in page number 42. However, I have also had one small document. Of course, any session, I cannot close any session without looking at Excel. I'll take you to the Excel at the end of the session. Then this is that issue. Then globally changing business models, there are political pressures and innovation, shared risk, lack of controls and all. You can see the IPL is one gaming platform. I don't remember the name. Prominently 400 crores worth of gaming platform is sponsoring the IPL, and the players are advertising in that, and we can understand to what extent that business model is working. So these are certain issues. Let me just, and integrity, and then common reasons for fraud is poor internal controls. This is where we need to spend a lot of time in understanding the internal control procedures with a detailed what can go wrong, a very detailed procedure. Thank Institute has given this IFC document in Word. I'll just share a little later. Collusion between employees and third party, we cannot find out this. However, the data trend may give us to find out this. That's what I told you, the employees, HR manager opening the accounts, bank accounts, and then transferring that. Then yellow flags or warning signals or red flags and whatever it is. This will also highlight the issue. So we need to have an extra bent of mind to carry out the audit, because Vyaparam is Droha Chintanam. Then how frauds are detected through internal audit, external audit, and then the internal control, vigilance by accident, and so on. Accordingly, we need to, this is a world rating agencies statistics. So accordingly, we can, we should design our audit procedures in such a way. And hence, SA 620, when you look at SA 240, there is a reference to SA 620, which says the auditor, as a part of his audit procedure, should insist the management to put on a disclosure by the internal auditor that they have carried out procedures to ensure that there are fraudulent practices are not there. And probably certain assurances, we are trying to take it from the internal audit as a part of SA 620. Now, whether SA 240, we need to ask them to see whether they can give it us or not. This is one issue, because anyhow, director's responsibility statement, they say that yes, we have conducted all, complied with all the regulations, rules and regulations, laws and regulations. However, the management, as a part of director's responsibility statement, they also say that we have installed all the controls to prevent fraud and error. They say that. So that is a assurance, that is an assertion given by the management. So for that assertion, what is the audit trail? We can ask them. Then they will say, yes, internal audit is one such assurance or the audit trail, you can believe it. So you can also put it in your audit engagement letter that I am going to rely on the internal auditor with respect to the fraud or documentation or whatever, or I am going to rely on internal financial controls study conducted by an external agency, and I have relied on all this, and hence my audit procedures. Probably you can rely on management representation letters to this extent. This is one thing. And then how anonymous tips of the fraud detections and all through from vendors and then anonymous sources, from employees, from customers. So probably I may have to ensure my processes. Probably I may have to include these kind of things into my audit procedures to see that there is no risk of fraud. And now, this is about the fraud and introduction and all. Let's move into the responsibility statement. I am considering the director's responsibility statement. I'm saying it's a management responsibility. So I just put out all this into two places. This is the management responsibility. Management responsibility, assertions and internal controls. It's the responsibility of the management to say all this. So for all these assertions and internal controls, I as an auditor look into SA 240. When I look into SA 240, this is what I said. All these standards were referred. I could not write many of this here. I could not write many of the auditing standards which are referred into SA 240. However, anyhow, the coming slides, you have a very detailed explanation about all these things. So when I carry out this SA 240, combined with all these things is called as an audit test. And this audit test is again compliance test and substantive test and analytical review procedure. And with all these things, if I find that there is a risk of material misstatement, then SA 330, and anyhow, the next session is by the Ankit about SA 430, I think, 450. So according to that also, how I am going to deal with SA 260 and 265, discuss with the management, those charged with governance, and SA 580 and all. Then if management agrees about it, and then you make a provision for that. And if they don't agree, or if there is no possibility for rectification and there is an emphasized paragraph is given and all, you can go in for emphasized paragraph. Otherwise, don't agree, and then this is where you have disclaimers and then all those. This is in brief. This is in brief as to how all the auditing standards has to go on. Now where is the question of small? Where is the question of small company, small file? Do I have to maintain? Now, if I have expressed an opinion, and if I express an opinion, I need to go into all these processes. It's not a big firm and a small firm question. Whatever judgment I give, those judgment has to be documented as per all this. So let's move into this part, and later on we'll come into this part. So this is management assertions and how they are. Now the management has to, like I am saying, I am documenting my audit procedure as a document for SA 230. I am documenting all this. Now management also has to document their internal control, their management responsibility, assertions, all these things. Management also has to document. What is that they have to document? Let us see. So management responsibility, fraud and risk are endemic to every business. There's need to ensure that all significant risks are identified. Now, whether the risks have been identified, evaluated, managed, and this is what they are saying in director's responsibility statement. Now, what is the audit trail for this? So we need to validate that. Then non-financial intelligent risks, intangible risks include cyber, social, ethical, environmental, probably which is not going to affect the financial statements. I need not bother about it. Going forward again. So this is the director's responsibility statement as 134.5. This is what the whole scheme is. Now we need to validate all this. And we need to see is there any accounting manipulations, accounting standards are manipulated to show more profit? Like, I am not, I'll come back to the next slide where I'm talking about various accounting standards, how it can be manipulated. And prudence judgment and estimates with respect to the expected credit loss, with respect to the valuation of inventories, valuation of investment. This is what again 580 raised by the NEFRA in the case what I have discussed in that 173 pages. This is addressed. This is also addressed. Proper care and adequate accounting records and safeguarding of assets. I think all these things they have assessed, they have commented on that page, and I as an auditor has to document the complaints of these things because this is the assertion that they are making it. Let us see how this can go on. So what I am saying here is applicable, the impact of fraud risk mitigation can be on applicable accounting standards, which I'll cover next. Prudent judgment and estimates, I've already said the valuation of investment. The classic case is that ILFS case. I have already given the page numbers of it. You can look at the way in which they have they valued it, which is a classic case of valuation fraud there. And estimates for the purpose of be it depreciation claiming, be it valuation, be it expected credit loss, so that I'll not provide for debtors, I'll provide more for debtors, and be it the Ind AS for the purpose of revenue recognition of contracts, where I say percentage completion and handed over, and all those things are A7. So estimates play a dominant role in profits. Then maintenance of adequate accounting records, safeguarding fraud. I say maintaining adequate record. This is what I'm saying. The way in which Tally and the way in which the SAP is configured is a big issue. Safeguarding of asset fraud preventing controls is a part of SA 134. Now management is saying this. Now we need to validate these issues again. So then going concern, yes, then going concern is again one issue, SA 580, 560, 570, 580 and all. Adequate internal control, financial controls, compliance with applicable laws. And now this is 134 director's responsibility statement. We have to look into all these issues then. So the institute experience is, you can see the institute's experience, recent non-compliance with Ind AS. That's what I think Ankit will be talking in in the next session on this. And whether these things are with an intention to defraud is what we need to look at. First of all, am I able to find out the deviations that are there in Ind AS? If so, whether that deviations, is it with an intention? Whether those deviations are resulting in any undue advantage to the person who is deviating it, this assessment has to be done to come down to a conclusion that it's a fraud. So however, but we need to understand, have an in-depth understanding on the Ind AS. And deficiencies observed in financial statements. Observation with relate. This is a document which is again available. I think Ankit sir will be talking about this. Now, this is what I said. Revenue recognition. What can go wrong? The policy and procedure of project completion, FOB sales or ex-factory, passing of ownership, milestones, the way in which I define this non-transparent or unverifiable conditions will have an impact on material misstatement of revenue recognition. Now, in the same way, property, plant and equipment, the way in which I capitalize it. Say, for example, as you all know that property, plant and equipment componentization is the biggest issue now. Like say, for example, aeroplane, the cost of aeroplane engine is, the life of the engine is more than the body of the aeroplane. So if I have a spare engine, I will capitalize that spare engine as a part of componentization. There are many big companies, many big manufacturing companies. If you take out their stores and spares and see, and you will find machines with worth of 1 crore, 2 crores, 3 crores. They are all shown as stores and spares, meaning they are reflected as stores and spares so that they get more drawing power. And if you strictly interpret it, then it will go into property, plant and equipment. Their drawing power will suddenly fall, meaning In the next slide, I'll talk about that here, the current and non-current. Okay, so the componentization makes now what kind of auditing or what kind of documentation I need to keep it in place to safeguard myself when management has an intention to get more drawing power and reclassified it. If at all you have observed it, now I can't say I have not observed. I have not observed the list of inventory. Now the top 10 or top 20 value wise, if I sort out, then I'm bound to see. Then I'm bound to have my professional skepticism, arm's length, all this knowledge to see that the so much value of each individual equipment which is shown as a stores and spares, that itself will raise a question. And in case, if I doubt it, probably the management will say, we'll get an engineer certification that the life of this is very limited. Probably. No, probably. That's the other way. That's how the management will start fighting with us. And sometimes the auditor will also change his seat from auditor role to the management, and the auditor himself will advise, "Arey, you get a management rep, you get a engineer certificate for it." In a lighter way, I say this. I'm not trying to say something about documentation planning, like tax evasion and tax planning and all, in a lighter way. So I'm saying I've just given all this. We are running short of time. So I'm just running quickly. I've just given here all these issues which you can link all this to the fraud related cases that are there in the market. You will definitely find all these issues. And this is what I think the Ankit sir will be talking about in this. So professional skepticism is I need to have a knowledge. That's what we have just opening in the opening remark. I said we need to understand. I can't say at a later date that I don't know Ind AS, I don't know Ind AS, I don't know what is Ind AS. All this I cannot plead ignorance on a later time, because Supreme Court in many instances have said chartered accountant is an expert. He's an expert, and he cannot plead like a general public that I am not aware of all this. This is one thing. Next, current, this is with respect to the financial statements. Current and non-current, we have already covered this. Life of the assets estimation, we were talking about estimations and all. Recoverability of debtors, this is what expected credit loss estimation. Fair valuation, that the interest rate, discounting rate, EBITDA and so on. Projections, discounted cash flow. Gratuity, iteration, if iteration is not properly captured, the gratuity provisions will change. Contingencies, legal interpretations. My God, in one of the cases, when management was not sharing their cases properly, we have approached one, you can make a note, those agency name, Probe 42. When approached Probe 42, within 1 week of time, as a part of forensic audit, we have done this. We have approached the Probe 42. We have approached the Probe 42. When we have approached, they have given a report on one company. We have surprised to see, even company was surprised to see, there are 521 line items of cases filed on the company. And that probe agency could able to take out the litigations that are there in income tax, GST. Oh my God, I don't know what's their intelligence. Of course, you can today, if you can go to High Court, and if you go to any court and type the company name or a person name, you can find out the cases against them. That's not a big issue. But today there are agencies who can give this kind of data to you. And then again, the impairment and going concern. These are all various issues which are going to affect the true and fair. Maybe if these are all intentionally done, then those are all going to be a fraud, and we may have to face as A1, A2, A3 and all. And so we need to have a strong documentation, which I'll be covering, which I'll be running through quickly. Director's responsibility, I've said the challenges in ERP configuration, which I'll cover. The last statement is about this only. fixed asset register, then fraud prevention control, that policies, procedure, ethics, tone at the top, attitude, culture, and so on and so on. You can find a lot of examples from C&AG ERP implementation reports. Oh my God, I've compiled this long back. I have seen they have commented on almost all the public sector undertakings who have implemented ERPs. The shabby way of implementing ERPs, even banks, you have a very good document on C&AG website, which throws us a good light on the understanding of the ERP implementations. Because of paucity of time, I'm not trying to show that here. But however, you can search into C&AG website. You will get tons of material on this. Then coming back again. So I'll just run through now. This is what is internal control. I'll just run through. Then fraud prevention controls and all. Yeah, preventive, detective, investigative controls and corrective controls. As a fraud management process, the management has to put in place these controls. Anyhow, I said that Institute IFC document is also talking more about all this. We'll cover. I'll display that also. Next, the fraud preventive control, how the fraud preventive controls has to be there. That is what we have seen. Culture of ethics should be there. Anti-fraud process and control should be there. Develop an appropriate oversight process. Then probably we can reduce it, if not prevent it. Let me just run through fast. Yeah. So we were talking about IFC, internal financial controls. So how it looks is components of these. It is internal financial controls. Example is sales realization is correctly recorded in the financial statement. This is what we are bothered about. But if you go a step ahead and see the operational controls on discounts on sale is given as per the delegated authority and adherences to the delegated authority is monitored. Now you are looking into, if not this, you are also looking into this controls. And fraud prevention is any unauthorized charge changes in the price master access controls. All this put together, now you are talking about internal financial controls, which is the role of a management. So I said the IFC, you have what can go wrong statement. This is management is saying we have internal financial controls, we have internal financial control systems in place. Management is talking about this. So probably you need to validate this. The way in which you need to validate this is given in the institute document. Let me just try to open that quickly. So let me share this document. Yeah, this is that institute document on SA 315. Anyhow, tomorrow sir will be talking about it, but I'm saying what can go wrong? What can go wrong? Because this is covered again in SA 240. So here this document is, so for all these activities, they have documented. This is given by the institute. It's there on the institute website. So they say for each and every element, they say recording of cash, what can go wrong? What assertion? What is the example control? Is it a preventive? Is it a detective control? Now, what are the other things that's going to be affected if these controls are not properly fit in? Is all explained. You know, this goes into 133 pages. I'll not read out this. I'm just trying, as I've said, I'm just trying to put all these things into one place so that it's easy for anyone to review or train internally or read at a leisure time. So this is what whose responsibility is this? This is the responsibility of the management to put all these things into place. I, as an auditor, will review this, or if I am not going to review as per SA 620, I can rely on the expert. So I can ask I can take a management representation letter and the report which is given by the SA 620, and accordingly I can close this if I'm not able to do this. Let me go again. Yeah. So this is about the management role we have seen now. Let's come back to the auditor's responsibility. Yeah. So this is the methodology. Let me not go into this. Then this is what the audit approach is full about. I've covered in the earlier slide, you have seen the auditing standards cover up. Now I've put the audit approach is full one form where I need to document each and every part of it. This talks about various auditing standards. So let's see those parts of things in next slide. So this is a statement we have already discussed this. So this is what I said now. These are the standards. And from here onwards, what can go wrong is the compliance procedures I need to understand. The controls around, ERP needs to be understood. The controls or preventive controls, detective controls are very good. Then the substantive procedures will drastically come down. I need to document both of this as a part of risk procedure. As a part of risk procedure assessment, I have to document both these. And that is what is given here again. This is SA 315, which will be covered tomorrow. Anyhow, this is a part of SA 240. So SA 315, what I have already stated, I could able to cover it for various heads of account, occurrence, then complete. This is an assertions. Then management auditor's responsibility I've seen. Now let us see the compliance to the standards. Now which standard, when it has to be complied, which standard, when it is to be complied, I've just documented it here. So SA 315, independently you have to do it. First thing we have to do this. Then audit evidence, SA 500. As you go on doing it, task dependent I have given it. Then all of the standards, you have to have an audit. Audit evidence covers all the standards. Sequences throughout, you will be doing this. External confirmations, independently you have to do it. First thing is SA 315 and next the second one. Then initial audit engagement, opening balances and so on. I just put all this into one place. I don't want to read out this again. I said I'll be sharing this with you. Then this we have already covered. Now, the purpose of putting this slide here is, I'm saying here, SA 240, the regulatory authorities are talking about all this. This is what my opening remark is. Now, having said this, let us look into how SA 240 is talking about in all these places. Now, SA 240 has a reference to SA 200. In this, it is saying, inherent limitation of the audit, material misstatement may not be detected even though planned properly, meaning that I need to have a management representation letter to the management that we are planning all these things. I am saying, I am communicating to them that this is how we are going to plan, and this is how I am going to carry out my audit. If I am able to do it with management representation letter and all, the management will not turn back to me and say, hey, you have not done this. You know, when something goes wrong, that's the time when management will jump on us. Hey, you didn't tell us all these things. But when things are going on, then it's like a honeymoon. When the relations spoil, then that's where we have all these buck passing, all those things. At that time, what is going to protect us is the documentation. And that is what I've just put it here. So it says about SA 200 is talking about professional skepticism. This is what we have seen into. Then you need to have what will protect us as per this, the MRL and the audit engagement letter and the documentation. will definitely. The other issue is non-detection of material misstatement due to fraud is very high rather than the material misstatement due to error. Considering this, we need to have a larger professional skepticism and have a very detailed audit program. That's what. And I said, because of the time, I'll not be covering all this, but it's all in layman's language. I could able to put all that cross references. This is what I was telling. SA 240 is talking about all this. And many other acts is covered here. And, these are all again, this is what, I have said here. You can just immediately look at this here. All the standards are covered here in one page of assessment. Meaning, when someone tries to question our auditing working papers, this is how they are going to question. This is how they are going to look at. This is how they are going to look at. And mind it, how do we do all this is a biggest challenge. How do we do all this is a biggest challenge. Meaning, should I use an Excel for planning, execution, documenting, and reporting? All has to happen in one place. Now, should I have a platform to do it? I don't think there is any platform which can address all this. Now we have to come out. See, I'm planning in MS Word, not even in MS Excel. Then I am executing it on MS Word on a piece of papers which I am collecting it, which is not even in Excel. And my documentation is all in splitted papers, but reporting is in MS Word. Now, meaning that all this is not in an integrated, this is the biggest challenge that we are facing today. Now, to come out of this, we need to have a platform today. And there are so many platforms that are there. Probably Google Drive will answer some of it. Pipilio is answering some of it. Excel is answering some of it. Then Zoho is answering some of it. Any audit is answering some of it. So these are all certain platforms which you can explore, so that at the end of the day, when someone asks me to demonstrate, I'm not going to fall flat. So from that point of view, I've just put it all this into one place. And these are all various other sections which is talking about the fraud. The reason for putting all these things is SA 250 laws and regulations governing. Probably I need to look into all this. And then finally, I said the configurations. This is with respect to one of the company where SAP was implemented. I can say 14,000 crores is the turnover of that company, where SAP is there. And this is the way in which their GST is implemented. Due to SAP configuration issues, GST compliance is presently carried out manually without a predefined set of processes, leading to undercharging of GST, non-availment of ITC, and so on and so on and so on. And I've given the between procurement to pay processes, so many misconfigurations going on in this. It's not I don't say it is intentional. This is not the example what I've said, that a forensic case where intentionally they have misconfigured. That's a different story altogether. Now, again, this is where I've said at agreement stage, process and accounting entries and all. We said cannot identify eligible ITC. There is no maker-checker concept involving sealed manpower and duplication of works. Nature of transaction cannot be identified properly. Since service code and relevant GL account is not linked, may lead to wrong posting of GL accounts. This is way in which the accounting configurations are done in SAP. Okay, having said about SAP, 80% of the time we talk about Tally. So let us see what's happening in Tally. So this is where again, I can't have a class without Excel, so I am going into Excel now. Yeah. So when Tally has all these configuration rules for inventory, for GST, for rates, for GRN processes, for disqualifying the ITC, buyer and seller information was not properly tracked, whole lot of issues, income tax. Under this situation, if I am carrying out an audit and then I don't know what to plead if something goes wrong on a different date. And then I've also said, let me just, these are all certain unusual entries which we need to, I'll not read out because I'll share these things. So furnish trial balance of the audit date to the annual general meeting date, so that details of senior management, these are all the checklist to see that carried out. Write remarks on this, write a remarks on all these things, put it into one place. Probably that can save us from any kind of trouble in the days to come. Okay. Finally, we'll go back to the presentation. Then conclusion, there is exponential risk exposure to the auditors today because of integrated information, digital footprints that is around us like a net, like a web, it's surrounding us without we knowing this, sensing this also. We have seen, anyhow, Dayaji will be talking about those issues. Surveillance through the data integration is ever increasing like anything. GST says that as per income tax, you have shown this turnover. Income tax says as per so-and-so, you have done this and all. So non-compliances to the ethical, technical and professional standards. Anyhow, Dayaji will be on the peer review. I think he would have already spoken about it. Then weak firm policies and procedures, weak quality standards, client's attitude and behavior, competition, all this is in digital footprints now, meaning our risk is going exponential. So having said that, what is the way out? The way out is only the ethical standards. That ethical standards, we are very close with the ethical standards. Our code of conduct of institute is very close to the Bhagavad Gita. I can say our ICI code of conduct is similar to the Bhagavad Gita. I can read out one or two if I am not wasting your time. So the very first sloka of Bhagavad Gita starts with Dharma Kshetre Kurukshetre Samaveta Yuyutsava Mamaka Pandava Seva Kim Karvata Sanjaya. Meaning, the literal meaning of that is the Dhritarashtra, who is a blindfolded man, is asking Sanjaya, is a very intelligent man, is asking Sanjaya, hey, what's happening on the Kurukshetra? This is the meaning of these two lines. This is the meaning of that, and that's how the Bhagavad Gita has come into the picture today. So who is Sanjaya? Sanjaya is an intelligent auditor like us. Accept it. Then who is Dhritarashtra? Dhritarashtra is a blindfolded stakeholder. Stakeholder is asking an auditor, hey, what's happening in the business? Now, that is how it is, but permit me to read it in a different way. I will read it in a different way. I say, Kuru, meaning perform. Kuru means perform dharma. Dharma means for us code of conduct. Perform dharma where? At every kshetra and kshetre, meaning every place, every circumstance, I have to follow dharma. And that will definitely protect us. Now, what is the parallel provision in code of conduct for this? Parallel provision for code of conduct in this is, any case, if I have wrongly parked my vehicle on the road and the traffic challan and the traffic police has laid a challan on me, it is enough for the disciplinary council to take an action on me. Meaning that if I am a professional, I am a professional throughout my life. I can't say individually, no, I can't say I as an individual, I speak like this. No, I have lost that, because buyer beware, knowingly I have bought this profession. So knowingly entered into this profession, lifelong, I need to follow the dharma. Then why should I follow this? Why should I follow this? The next sloka, somewhere in the second chapter, It says karmanye vadikaraste ma paleshu kadachana ma karma palahetubho ma te sangoste karmani. The meaning is you have a right to do a karma action, but never expect any fruits thereof. You should never be motivated by the result of your actions. And what is the parallel to this? The parallel to this is you do your duty and don't quote your fees as a percentage of what you achieve. Thank you very much for your patient listening.
Amazing, Machar. One thing, I dropped in immediately only because of one reason. Aniket Bhai, who is here with us, Central Council member from Ahmedabad, and a man who's always been talking about the professional ethics on the core and to his highest pitch. I think his smiles in the last were actually giving a message what Premnath sir was speaking. And Premnath sir, today the fact undoubtedly is everywhere is Kurukshetra for us. Whether you do a GST audit, tax audit, statutory audit, inflow audit, certification work, forensic audit, you do an IB professional services, you talk about anything, every place is a Kurukshetra, and undoubtedly our dharma is to give an independent opinion, and beyond that no one can question our abilities and our capabilities. And only to demonstrate that you have done it right, the documentation is the only saver. Whoever sees it right doesn't matter, but what he sees in his hand will actually matter. So looking from eyes is always going to be the critical factor. Friends, I think this session would have been a great learning experience. I was listening to it. It was a great learning experience. Sorry, Machar, I got in only for this excitement, because one side Aniket Bhai was there, second side, Premnath sir was there. So it makes a whole lot of difference to be together and make it, listen to all of us. Over to you.
Thank you, sir. Thank you, there, sir. Premnath sir, thank you so much for your wonderful session. It's generally hearing auditing standards in my CA inter or CA final, it's really boring. So now it's a different attitude. End of the day, I have not even left the screen for a minute, because this is the first time 100% I heard the auditing standards. Thank you so much for an excellent presentation. And we'll also recognize the presence of our Central Council member Aniket Talati ji. He joined around 6:15. Thank you so much for joining on time. And 15 minutes in excess from our side is sorry for you, Aniket ji. But coming to Premnath sir, it's a really great insight to hear you, and it's a great value addition for our audit quality. Thank you so much from Hyderabad branch of SARC of ICI.
Chairman sir, I have 3 questions, sir.
No, we'll take the questions later if
Sure, sir.
Premnath sir is there, because Aniket is also come.
Yeah.
And he has today some limitation. So
No, Dayabai, it's fine. Let the questions continue. I'm okay. No, don't worry.
Yeah, before that, I would like to say thanks once again to Premnath sir, and I would like to request him to accept our virtual certificate of appreciation from the Hyderabad branch of SARC and ICI. Your wonderful efforts, Premnath sir, and thank you so much for your continuous guidance and support for Hyderabad branch.
Thank you.
Thank you, sir. Thanks a lot.
Thank you. Thank you very much, sir.
Thank you, sir.
Yeah, thank you, Chairman sir. Now we are welcoming our Central Council member from Ahmedabad, T.A. Aniket Talati ji. Welcome, sir. Before introducing today's speaker, I am requesting Dayabai to say few words.
We are already late, Satish. Let us actually listen to the learned man. No other person than Mr. Aniket Talati. We will have a discussion at the end.
Sure, sir. Sure, sir.
Thank you. Thank you.
Yeah. Now I am requesting Session Chairman C.A. Chengal Reddy Garu to introduce the speaker, sir, please.
Welcome, Aniket by CCM. It's my privilege to introduce the youngest CCM of ICI, I can say. Aniket Bhai, a man of refined thought process, quick understanding and sharp vision. C. Aniket Talati is a Central Council member of the Institute of Chartered Accountants of India for the term 1922. Having served the profession for about a decade, he had been elected to the Ahmedabad branch for the terms 10, 13 and 13-16. He was elected to the WARC for the term 16-19. He has served as an youngest ever chairman of Ahmedabad branch for the year 14-15. and as a secretary WARC for the year 17-18. He is respected for his strong organization skills and deep insight in the affairs of profession. C. Aniket Talati has contributed to the cause of profession from various professional perspectives in his past roles. He heads the counseling vertical of his firm, Talati and Talati LLP Chartered Accountants, one of the largest firm in Gujarat. He has led an engagement team of over 20 CS to New York every year to work on top real estate development of USA. Being a Master of Commerce and Articleship with Loloc Lewis, a networking firm of PwC, Anketi has developed a unique perspective to look into the matter. He has led the cause of profession through various committees of the Branch Regional Council. He is also chairman of FRRB and convener of Digital Re-Engineering and Learning Directorate. He is also serving on various other committees of ICI, with a vision to patiently and clearly responding to the issues of image and identify accountancy profession in the country and abroad. Aniket Talati has a very keen eye and understanding of the matter. With his deep insight for the affairs of profession, he has always kept the profession on priority. A man of grassroots understanding of the matters and respected for his down-to-earth approach to the issues at hand among his professional colleagues. Ankit Talati has a surpassing ability to deal with a variety of difficult situations, being a thoroughly conversant with the professional concerns and demands of his times. Ankit has authored relevant books, including a treatise on RERA, published by CA Association of Ahmedabad, an academic by temperament. Aniket has published numerous articles in newspapers, magazines, and professional newsletters, and delivered lectures in more than 150 seminars and conferences. With this brief introduction, I present today CCM Aniket Bhai. Aniket Bhai, the screen is yours right now. Welcome to Hyderabad.
Thank you so much.
Thank you so much.
Thank you so much, Chengal Reddy Garuji. To my dear friend and council colleague, somebody who gives all of us in the council a lot of energy. I think even last year when the COVID struck, 100 programs were done virtually by him. And I think after Macharji taking over, it doesn't feel that the batsman has changed, because I think Hyderabad branch is scoring boundaries and sixes. So my compliments to the entire team of Hyderabad. First of all, Macharji, Satishji, all the branch managing committee members, ably led by Dayabai. Let me honestly, first of all, before I say anything, salute all of you. 450 participants on a session on standards on auditing. I'm telling you, this will go down in the history books. I have done this audit standards, probably 50 plus lectures across the country, and I've never seen a 3-digit kind of a participation. And I think that speaks volumes about how effectively the branch is able to connect with the members, and more importantly, the trust that all the members have in Dayabai as chairman of our peer review board, and the AASB led by G. Sekar sir, where you have shown this keen interest in attending this seminar. So compliments Dayabai and the branch once again.
Niket, we have participants across the country today. This is a national refresher course.
Wonderful. And like I said, it's great to see, heartening to see peer review board and AASB joining hands together. And what does it show, dear participants? It shows where the institute's heart is. The council members, the committees, all of us at the regional level, like Chengalji and everybody else, or at the branch led by Macharji, we all honestly believe that it is our incumbent duty that how do we improve the quality of audit of our country? Nowhere am I saying that it is not good, but there is always a room for improvement for anybody. And therefore, how do we bring up the audit quality that is existing in the country? Second, how do we spread awareness so that tomorrow, God forbid, if any of our signed financial statements, and signed not just as a auditor, but even as a preparer, as a CFO, the risks are in today's world with the Companies Act, with the NFRA in place, with the revised code of ethics, which places equal weightage on chartered accountant in practice and the chartered accountant in business for a lot of compliances. I think extremely critical. And I think that is where, with that intention, the institute and all its limbs are trying to do programs like this, that the quality of practice units, the documentation, because we all will agree that somewhere the audit that our smaller medium firms are able to do are much more thorough. Again, nothing against the larger firms, but so much more thorough than some of the largest audit firms that are there in the country. Maybe because of the client size, maybe because of the years of experience that we have accumulated in that industry and specific to that client. But where do we all lack? We lack in the documentation. And today's day, we will all accept, jo dikhta hai wo bikta hai. What is written, what is shown is what counts. It is not what you are able to just state. It is what you are able to demonstrate in front of your disciplinary committee, in front of your peer reviewer, in front of a quality reviewer, if he comes tomorrow, or God forbid, if it was to be reviewed by the disciplinary committee or even the NFRA. It is your audit documentation that will speak. It is your compliance of standards that will speak. And therefore, wonderful, I salute Premnath ji for the wonderful parallel that he has given. You know, Ma Kaleshu Kadachana, we've always heard of this saying, we've always referred to it, but how it refers and correlates to an audit. Very rightly mentioned by him, that don't come into this profession of audit if you are here for the fruits. Chartered accountants, believe me, can be extremely successful. Open up a mutual fund agency for God's sake, and you will earn much more probably than you could in a small standard audit practice. Audit is a revered profession. The trust of the entire nation is on us. I can give you hundreds of quotes, starting from the President of India to the Prime Minister to even the Secretary of MCA, who have all said that auditing profession is the steel frame of corporate governance in this country. Sardar Vallabhbhai Patel said that the steel frame is of the country are the IASs, and an IAS came and said, but for corporate world, the steel frame is not us, the IASs, it is you, auditors, as chartered accountants, who are doing the solemn task of attesting, certifying, and issuing an audit opinion on the financial statements. And I think that having been said, done, and he also used a very valid term, buyer beware, caveat emptor. I think all of us used to learn it when we understood the Contract Act. Buyer beware. It is this profession that we have chosen. In today's day and time, when we are aware, for example, in the medical profession, if any one of us was planning to send any of our sons, daughters, or relatives in the medical profession, we know the risk involved. The COVID is there. It is such a highly transmissible disease, and you are there 16 hours in front of the patients. Yet a person is willingly going to that operation theater. Don't think he's going there only for money. He can easily do a video consulting sitting at home with all the experiences that they have of operation theater and make probably much more money than they are making sitting in the operation theater, risking not only their lives, lives of the loved ones to whom they go back in the evening every day in the evening to their homes too. Why are they doing it? Because their code of ethics wants that you have to put service before self. You have to put your nation's interest before your own interest. And I think very similarly, we as auditors, whenever you are doing audit work, have to understand that this is not for the audit fee that I have quoted and I have been granted by the client, that I am doing this work. The client's interest, the fruits that he talked about from the Bhagavad Gita, are not the fruits that you must be aiming for. Always remember, we are given this onerous responsibility and the trust of the nation. The Prime Minister says your signature is more valid than my own signature. And that value is given because they expect you to be fiercely independent. And whenever you see any deviation, frauds, as was discussed by Premnath ji, or misstatements that I will discuss in my presentation today, either of these, if they are material and accumulate, have the courage of conviction to not issue SA 705, but go to the SA 700 report, but go to the SA 705, issue a modified opinion. It may be a qualified opinion, it may be an adverse opinion, it may be a disclaimer opinion. You may even choose an emphasis of matter, but always be true and honest about what is the role and responsibility of an auditor. Always try and ensure that this responsibility that is cast on us, like very well ended by Premnath ji, we always ensure that we don't work only for the interest of the appointee or the fees, but we have a larger public interest in mind. Having said that, let me share with you a couple of presentations today. I'm going to switch between the two presentations that I have prepared for this topic. And first, I would like to start off with the standards on auditing. And very rightly, Macha Rauji in his initial remarks mentioned that whenever he was in a CA inter or final, this standards on auditing was something which was extremely boring, which was something that never interests any of us. In fact, even for CPA committees chairman, you will realize when you do a program on income tax and GST, you will have hundreds of people. Why? Because members will come, they can learn something through which they can earn, they can give certain value addition to their client, and therefore they feel, yes, I will pick up something from this faculty. Standard on auditing, we've always perceived as it's a compliance. What new will I think? I know how to vouch. I know how to get a confirmation. I know how to tally a balance sheet. I know all my accounting standards. What is it that audit standards are going to provide to me through this session, which I don't know today? And let me say very honestly and upfront, I give you the example of COVID. And Macharji, I relate this with the COVID. We never, all the 450 participants, I can assure you, never knew what the importance of CRP or D-dimer was. We never knew what a CT value of your chest scan was. We never, in fact, knew a lot of the remdesivirs or the Fabiflus of the world where they existed. But now, even if we are not doctors, majority of us know what are these parameters, these markers, what blood report we must get. Why? Because the calamity has put us to this. Similarly, you will find majority auditors don't worry about these aspects. But when it comes to somewhere where their client gets fixed, there is a huge NPA, there is an investigation ordered, there is a forensic that is done, and then they go back and refer to the auditing standards and then try and see, yes, this work, how do I correlate it with this standard? In fact, my advice to all of you would be, it should be the other way around. In the COVID era, we have all learned safety standards. This mask always with us. In fact, now we are having a double mask going out because that is what the government is advising. When safety standards can be followed with such vigor, social distancing, before 2019, the word was not there in the dictionary. COVID appropriate behavior, double masking, do gaj ki duri hai zaruri. All of this we have adopted as safety standards. And believe me when I'm saying this, just as important these safety standards are for your physical health and well-being, audit standards for all of us who are into the attestation, not just the standards on auditing, but the entire standard sets of 5 standards, which I will just very quickly briefly go through, are equally important as a safety standard protocol of wearing a mask. If you are knowing these standards, if you are well versed with these standards, then truly it is how you can avoid corona by staying indoors. Similarly, following these safety standards, following your standards on auditing, largely one can ensure that even if something were to happen tomorrow to a client, and believe me, there is no early warning, suddenly a client will go down under, there will be certain expenses then will get picked up by the banks saying, why did these expenses happen? And then the entire mechanism of various disciplinary agencies, various investigation agencies looking at the financial statements begins. So always be prepared for this in advance. And what is it that I would like to discuss on that front? Let me just take you through that presentation. Can I get the right to share the screen?
Ramkumar, can you give the co-host to the Aniket sir?
I have given. Co-host I have given.
Sir, please check, sir. Now
Yeah, 1 minute. Just give me 1 minute. Is the screen visible?
Yes, sir.
Wonderful. So I think the first slide, which I always like to cover when I take any session on auditing standards, is I bring up these images that are in front of you. And the reason I'm doing it is because out of the 500 participants, 430 odd participants, maybe a majority of you will know what these publications of the institute signify. But for the last man in the crowd, I always try and ensure that we first begin by understanding the weightage and the importance or the significance attached to the various pronouncements, the various publications of the institute. And therefore, the best possible example, which is in front of you, are these wonderful publications issued by the institute. And a lot of times members ask, what is the reason for having all the publications in a separate color? Is it that pink is preferred by a committee, the dark green is preferred by another committee? Answer is absolutely no. These are all based on what are the significance. At the center, in the pink, are the standards. Standards are something issued by the council. They go through the entire process of a guidance in the form of a exposure draft. So we are taking guidance of all our members of the industry, and outreach is done. And then they are issued in the form of mandatory standards. So what are these standards? Let us discuss. Accounting standards, which are applicable to non-Ind AS companies and to non-corporate entities. That is your partnership firms, your LLPs, your proprietorships. That is your accounting standards. Then there's a compendium on Ind AS. Those are applicable qua companies which are subject to Ind AS, that is listed entities, net worth about 250 crores and so on. Then there is a compendium of standards in auditing. These are all the auditing pronouncements, again in pink color, mandatory in nature. Standards are issued by the council and are mandatory. There are other sets of standards like the image in front of you, compendium on internal standards. If you go through the preface and the framework, it very clearly states that these standards are mandatory, but for internal audit standards, the date when they become mandatory is yet to be notified by the council, because some standards are still being implemented. But it's in pink color because these are extremely important documents. And why I'm saying it's because all these pink documents, these pink publications of the institute must be on your table or in your library if you are in the practice of attestation. Accounting standards, the Ind AS, the standards on auditing and the auditing pronouncements, the internal audit standards, and now under the leadership of Dayaji, who is the vice chairman of DAB, and chairman of DAB, Manu Agarwalji, forensic accounting and investigation standards, which will also become mandatory very soon. These are all standards. What is there then in the dark green? These are guidance notes. Guidance notes, dear colleagues, you will be aware these are recommendatory in nature, but effectively made mandatory, because if you want to deviate from any material or any pronouncement which is given in the guidance note, that can only be done if you have sufficient interpretation of the standards which it relates to or of the legal provisions. That is to say, effectively they become applicable to all practicing chartered accountants. There is a guidance note on audit of banks. Those of you who have done a bank branch audit recently would have referred to it. There is a very common guidance note on tax audit, which is issued and updated every year. I'll give you one example. The definition of turnover is given there. Specifically, those of you who've done equity shares, F&O, intraday will realize there was always a confusion of how you compute turnover for the purpose of applicability of section 44AB. Now it's very clear. It's a guidance note. So you may say it's mandatory or not mandatory. Well, it is recommendatory, but effectively mandatory, because all of us have to follow the definition which is given there of turnover, and based on that we are deciding whether tax audit is applicable or not. So these guidance notes also very important pronouncements which must be there. And then the others, light green, red, other colors, these are all technical guides, education guides, background materials, etc., which may be technical or non-technical. These are issued by the committees by and large. not issued by council. So therefore, generally no exposure draft is done. Whereas for guidance notes and the standards issued by the council, extensive exposure draft process is done. So first and foremost, before we get into SA 450, it is not optional. Like I said, like your safety standards are important, these standards are also extremely critical. And bear in mind, that is the intention with which the peer review board, the AASB, the FRRB, where I am chairman, we are doing extensive programs to educate and, like I said, improve the quality of audit. And what better testament to the council's commitment to improving audit quality than creating a whole center for audit quality, where we are giving an assessment tool to all audit firms. You can measure your standing in the knowledge terms, in the infrastructure terms, rate yourself and get a ranking of how mature your firm is with respect to and with regards to audit quality. So these documents, their understanding is extremely critical, because going forward, like in the developed world, audit quality will become in certain ways a very important tool that all the firms will have to follow. And you have all seen, with all the efforts that the institute put in over the past 1.5 years, very recently RBI has changed the entire audit appointment process of NBFCs, banks, that is public sector and private banks. And it has opened up huge opportunities, believe me, huge opportunities for Indian firms. In fact, it is giving Indian firms a huge level playing field for the very first time. And I must compliment the government, the RBI, that when the Prime Minister has given the vision of 100 large Indian firms and 10 of them being internationally recognized, I think this is a step in that direction, where no large firm can dominate the market, where work will get rotated amongst the audit firms. And as attendees of this session are practice units, I would implore you, urge you, that let's all decide to improve audit quality, improve compliance of standards on auditing, improve our documentation, so that this opportunity which is granted to us, which is given to all of us by the RBI and going forward by other regulators, we are able to not just grab the opportunity and proudly see joint auditors, Indian firms signing the biggest banks of the country, but more importantly, we can showcase to the world that our Indian firms are second to none, are at par with any international accounting firm that is out there, and we are able to give the best services. And like I said at the beginning, this can only be done if we are able to showcase that yes, we are compliant, our audit quality matrix is top notch, our documentation is par excellence, and our compliance to standards on auditing, and what the earlier faculty mentioned about ethical standards, is also unparalleled. Very important. Why do I say that? Because in today's world, all of you are there, are auditors, and very routinely we use 3 words interchangeably. We say audit, we say attestation, and we say assurance, as if they mean the same thing. They all mean different things. And why it is important? Dayaba is here. One of the largest mistakes which is happening today, for example, not from the banker's perspective or the regulators, other regulators' perspective, even our own chartered accountants, we are calling forensic, the work of forensic, as forensic audit. Dear colleagues, what is audit? The conclusion of audit is at the fag end in the form of issuing an audit opinion. So if I'm doing an audit, I will issue a report under SA 700. If I'm doing a review, SRE, that is the standards on review engagement, I will issue as per SRE 2400. If I'm doing a compilation engagement, then I will issue as per SRS. If I'm issuing projections, that is future financial information, then my report will be as per SAE. Here you are issuing an opinion. Therefore, these are audits, reviews. In the case of forensics, The basic premise of a forensic accounting engagement is to separate fact from opinion. Facts have to be brought out, facts have to be investigated, and the report of the forensic is at best a summary of findings. It is not issuing opinion. You, me, or any other chartered accountant, we are not to sit in judgment of whether the borrower, for example, if the appointment of forensic was done by a lead bank or the bankers, whether the borrower has siphoned funds. You are not to judge that. That bank will do if they have to classify the account, from an NPA to a fraud account, and then they want to call the borrower as a willful defaulter. So they will apply the RBI master guidelines for willful defaulter. That bank does. If there is some criminality involved, the courts of the country will decide whether the promoters are guilty of any misappropriation, any siphoning of funds. It is not us who can be the judge, the prosecutor, the jury, all three together. Our aim in forensic is simply to help and aid the investigation agency. The investigation agency will frame the charge and the judge will finally determine guilt. So in forensics, we are not giving a guilt. We are not issuing an opinion. It is referred to as forensic accounting. The certificate course of ICI is also FAFD, not forensic audit, forensic accounting and fraud detection. And even the standards which are coming through are forensic accounting and investigation standards. Accounting, the 4th A, audit, attest, assurance. Accounting, dear friends, is the larger globe where all of this fits into. Don't think that accounting is bookkeeping. No, we are chartered accountants. We are accountants. That is our last name. And therefore, accounting is going to be extremely important as a terminology. And we must refrain from calling this assignment as a forensic audit, but as a forensic accounting investigation once these standards get notified. At the same breath, let me mention, for all the forensics audits which are done prior to the issue of these forensic accounting investigation standards, because there we are clearly stating that the appointment letter, the engagement letter should refer to it as FAIS. But if you have in the past issued a forensic audit report and you are doing audit, then for those applicability, since it is an audit, your standards in auditing will be applicable to you. So for all the past assignments, if you have done a forensic audit assignment, you've done a special audit assignment or any other audit, for all audits, standards on audit are mandatory. And therefore, this last chart that I would like to draw your attention to, on the top are the Chartered Accountants Act, the Code of Ethics, which the faculty referred to as the Gita, and the pronouncements of ICI. 5 important set of standards. SQC applies to all firms. Very important. Quality, quality, quality. We as chartered accountants, we may be issuing the audit report of the largest company or a certificate of a small partnership or a proprietorship firm. In all cases, quality is expected and must be adhered to. So SQC, the first set of standards. Below that, if assurance service is provided, that is to say, you are going to give a report which somebody else other than the management will rely on, you can have 2 forms of engagement. One, which deal with past historical financial information. Today is 6th of May. If I am attesting financial statements for financial year 2021, that is the year ended 31st March 2021, then if it's an audit report, I will issue and follow standards in auditing. If it's a review, let's say last quarter limited review, then SREs are to be followed, that is standards on review engagement. So for historical, 2 parts. Assurance can be of a 3rd part. It is not historical. It is for the future. For example, forecasts for 5 years. For example, for a prospectus, you are supposed to certify and give a report on projections of future years. Those are covered by SAEs. There may be certain report, for example, a BPO, KPO is your client, and you want to give an assurance on the controls of the KPO. Again, SAEs are applicable. But if it is not assurance, management requires you to perform certain agreed upon procedures. Management says, I am not subject to audit. I am not a company. The threshold of tax audit does not get triggered. But please issue a financial statement signed by the auditor, rather signed by a chartered accountant in practice, not auditor. Then you can use the SRS on compilation engagement. And if you're doing an agreed upon procedures, you will use the SRS for AUPs, that is agreed upon procedures. So 5 very, very important standards that I would urge and request all of you understand: the audit standards for audits, company audit, tax audit, any other form of audit, the statutory audits, the review standards for review. If it is interim review, then that standard. If it's full year review, those standards, so SRE. If you are doing projections or controls, then SAEs. Or if you are doing related services, that is agreed upon procedure, you are not giving an assurance. Compilation, audit is not at all applicable, but they want a chartered accountant to look at the numbers and give a certificate, then issue as per compilation. And therefore, I always say this: if a client comes to you and says, please give me an unaudited financial statements, and you will say, I am out of the standards on auditing, because at the top I have mentioned unaudited financial statement, or I have mentioned unadjusted unaudited financials. It is not the job of chartered accountants to simply sign financial statements. Our signature always has the important words, as per report of even date attached. So don't simply take a financial statement and sign at the bottom and on top say provisional or unaudited. That is not the task and job of a chartered accountant in practice. You are to issue a report on financial statements. If you are the statutory auditor under the Companies Act, or you are issuing an audit report under any other law, SA 700 report will be issued. If you are doing a review, then SRE report will be issued. But if audit is not applicable and you still have to certify it for banking needs, follow the SRS, standard on related services for compilation, and that must be referred to. And for all other attestation functions also, there is a guidance note of the institute for certificates and report on special purposes. Follow that if you are issuing a certificate or any other form of report. Very important that I wanted to share with you, because in today's times, we are not clear about what are the applicability of which standard to do. And therefore, a lot of times we are seeing that these mistakes are made by our auditors. Having said that, let me now take you through what we would like to discuss in detail today. That is the engagement standard, which deals with SA 450.
Aniket sir, 5 minutes break.
Sure, absolutely, no problem.
Have a cup of coffee and please come again.
Sure, so we'll do a 5-minute break, and after that we'll continue with the 450, that is misstatements. What are the forms of misstatement and what the firms must be doing. Thank you.
Great, sir. Thank you. Satish Garu.
Sir.
Please take care, sir.
Yeah.
So this can we start?
Yes, sir. Please.
Okay, so I hope all the members have taken a 5-minute break just to.
No problem, sir.
Okay, so I hope that all the members, I can understand a lot of technical discussions that have happened for a couple of hours, and definitely a biological and refreshment break is in order. Like we discussed just before we move on to the particulars of the SA 450, we discussed about the relevance of the standards on auditing. I think an excellent session at the beginning, which discussed about fraud and the ramifications of fraud on financial statements and the role of auditors. Before I began the topic of SA 450, I just wanted to give you an overview of all the pronouncements and the authority attached to all the pronouncements of the institute in the form of standards, which are mandatory, in the form of guidance notes, which are effectively also compulsory, all other publications, the different set of standards that are out there, which must be complied with, and why when you do an audit or an attestation function, it may be a statutory audit, a tax audit, a forensic audit, which it is known so far, or it may be any other form of attestation in the form of assurance or a related service. There are relevant standards on auditing, review engagements, assurance engagements, and related services which are applicable in different scenarios. We discuss about unaudited or provisional financial statements also, and why you must always have the importance of these standards. A chartered accountant is not permitted to take printout of simply a financial statement, write provisional and unaudited on top, sign at the bottom. No, your signature in financial statements is always subject to and correlated to a report that you issue. If you have done the audit, issue a report under SA 700. If it's an audit under Trust Act, under any other act for that matter, in the DLP Act, all those will also have to correlate to SA 700. If it's a tax audit, issue the form 3CB, 3CA, whichever is applicable. If it is a review, then SRE 2400 will be applicable for a full year review. So on that financial, whenever you are signing qua your report, which is an audit report, a review report, and assurance engagement report, that is for projections. It is a compilation report. So if you do not want to do an audit or review, you can issue a compilation report, but that must be as per the SRS. And now we come to the standards on auditing, and more particularly the standard on auditing SA 450, which deals with evaluation of misstatements identified during the audit. So there are standards which relate to the planning. You would have discussed those. Then there are standards which deal with what I call as field work. When you are doing the getting down and dirty work of actual audit, of doing vouching, of doing analytical work, doing preliminary analytical reviews, final analytical reviews, of doing tests of controls, of doing tests of details. These are all standards related to field work. And once you do the field work activity of audits, you have, for example, gathered audit evidence. You have sought external confirmations as per the relevant standards in auditing. Then comes the important task of evaluating. Evaluating what? You have to evaluate the impact of misstatements on financial statements. This is during the course of audit. This standard is effective from April 1, 2010. So 10 years that this standard is in vogue and in effect. What is the crux of this standard? The standard is divided into the introduction paragraph. So the scope, the standard applies to the auditor's responsibility to evaluate identified misstatements. That means whatever misstatements you have identified during the course of the audit and uncorrected misstatements. For example, you did the audit. There are certain expenses that you do not agree with how the management has treated them. There are certain amounts, for example, a depreciation calculated by the system and a reperformance of the depreciation done by yourself during the audit. And there is a difference. And the management says, no, we will account for depreciation only as per the amount calculated by our ERP. So there may be some uncorrected misstatement. So those uncorrected misstatements and identified misstatements both have a bearing. So that is the scope of this essay. And this standard of auditing deals with two specific other standards. Why? Because if you have seen a material misstatement in the financial statement, then you have to go to SA 700. And that is one standard I'm sure all participants are very clear and aware with, because that gives in the illustrations at the back the format in which an audit opinion, that is the report of auditor, the independent auditor's report, is to be issued. And what does SA 700 say? In the SA 700, the auditor says that the financials are free from material misstatement. So that is an assertion. That is a opinion that you as an auditor is giving on the financial statements, that these financials are free from material misstatement. And where do you get the misstatements and its treatment from? That is where you come to SA 450. And for the word material, you go to SA 320, which deals with the concept of materiality. So 450, which talks about evaluation of misstatements identified during audit, has two repercussions. One, forward, that is in the 700 series, there is a misstatement. The misstatement is material. Then audit report will have to be suitably modified. If not, you will state in your audit opinion that there are no material misstatements. So one effect is forward-looking, and other related standard to this is materiality SA 320. Because if the only and only if the misstatement is material, will you then modify your audit opinion. For trivial small errors, it is not applicable. So the scope, you are aware, the effective date, like I said, from April 1, 2010. Then the standard talks about the objective. Why is there a standard? The definitions, two important definitions that this standard covers: misstatements and uncorrected misstatement. Both are dealt with. Then there is the R, the requirement paragraph. What is the requirement set out in this standard for the auditors? And like in the previous session, you have seen the onerous responsibility of issuing a financial statement and ensuring that, yes, they are adhering to all the financial reporting standards and framework is that of an auditor. What does that mean? That whatever financial statements on which you are issuing a report, they are complying with the financial reporting framework. If they are following standards, that they are following the accounting standards. For example, if it is a non-corporate entity or a company for whom Ind AS is not applicable, then your AS 1, 2, 3 up to 29, whether all those accounting standards are applicable or not. That is the financial framework, the reporting framework. If it is Ind AS, then whether all Ind AS which were recommended by the, which are rather issued and created by the institute, recommended by NFRA, and then finally notified by the government, the central government, those have been complied with or not. So that entire process, which is a requirement set out, is given in this standard. So what are you supposed to do? You are supposed to accumulate identified misstatement, then consider as the audit progresses whether this will have an impact, evaluate the effect, seek a written representation, and document it. And finally, there is excellent application and other explanatory material given at the back, which will explain each of these terms and some scenarios to you. So then, what is the scope? It is the auditor's responsibility. Premnath-ji in the session mentioned earlier that you are giving an opinion. You are doing the dharma of ensuring that the financial statements that are issued comply with the accounting standards. And why do you have to do that? Because you are certifying compliance of the financial statements with the financial reporting framework. And as chairman of FRRB, I would definitely take you through the presentation. There is a beautiful presentation, and there are 4 publications issued by FRRB which specifically discuss each of these non-compliances. 3 publications, 3 different volumes which deal with non-compliances of accounting standards, AS 1 to AS 29, which are applicable to non-corporate and non-Ind AS companies. 3 volumes where you will see what are the non-compliances in AS 1, 2, etc., etc., etc. And the 4th publication, which I had the privilege of coming out with in February of this year, it is the first ever such publication internationally. And as chairman of the board, the FRRB has issued this last year, which deal with common errors in Ind AS reporting framework. So to all of the participants and attendees who are attending this program, my request and urge to all of you will be, please have a copy of all these 4 publications. Premnath ji showed you a pie chart where the non-compliances qua each standard was highlighted. That is derived from these publications. I will share all the links of 4 of these publications with the branch, and would urge the branch, Satish Garu and Macharji, please share it with all the participants. And why it is important, like I said, is because your auditor's opinion as per SA 700 is going to be impacted by this.
Surely.
Thank you. So what is it that this standard then talks about? It expects, as an auditor, you are supposed to do 2 things. And the word is and. 1, evaluate the effect of identified misstatements on audit. What do you mean by identified misstatements? You have gone to the audit. Your team has done the entire audit process and identified certain misstatements. You went, you called for an invoice, and you saw that this is a capital asset that has been acquired, and the company had charged the entire amount to revenue, that is to say, booked it as a repair and maintenance expenditure. And when you looked at the invoice, it is a new asset. All the norms for capitalization as required by the standard are met, because there is going to be increase in production, it is adding to the utility, and there is a long useful life that is attached to this asset. Basic revenue and capital treatment we have all encountered in all of our audits. This is an identified misstatement. So you have to evaluate it, see whether the amount is material. It is not just materiality at all the time. Sometimes regulatory requirements also require you to separate and segregate. For example, if you're doing a tax audit and you find that there is a penalty which has been paid by the company. Now, this is a penalty, not in the nature of a fee. Genuine penalty, you can see it's penal. They have broken a law, and therefore penalty has been charged and they have paid that penalty. And the company simply put it as an administrative expense and merged it somewhere. You have identified it, so you will report on it, and for the tax purposes, the company will also have to disallow this. Now, these are identified misstatements. The amount may not be material, but since it is a penalty nature, and the reporting of tax audit specifically requires you to separately report on it, then though not material, you will have to do some audit procedure on it. So step number 1, evaluate effect of identified misstatements. There are multiple examples. I will give you some as we go along of what kind of misstatements we identify in our audit. And the second requirement is that you have to see the effect of uncorrected misstatements. That is, for example, like I gave in the beginning, you have calculated depreciation on Excel. Client calculated using the software, the ERP. Depreciation as per your computation is 9 crore 36 lakhs 500, and let's say as per the system is 9 crore 37 lakhs, and you determine based on a 10,000 crore turnover, this amount is not material. You bring it to the attention of the client saying, this is what the depreciation amount ought to be as per Companies Act. This is the amount as per yours. And the management says, no, we do not propose to pass an adjustment and rectify the depreciation. We will go by what the system is calculated. Then effect of these uncorrected misstatement. Uncorrected means which the management has not rectified. That will have to be seen and evaluated by you. So to understand the applicability of the standard, we have to understand 2 important definitions. First is there is misstatement. What do you mean by misstatement? It means difference. There is a difference between amount, that is to say you calculated an amount and brought up a calculation, the client has a working. So the amounts differ. That is difference between amounts. The depreciation example I gave you. Classification. You classify something as capital. Management says this is revenue. that will be a misstatement. Presentation, your expectation and your understanding of Schedule 3 is that certain amount will only and only qualify as a long-term advance. And management does not agree with it, and they say, no, this should be shown as a short-term advance. This is a presentation difference, which is referred to as a misstatement. And finally, disclosure misstatement. AS 15, employee benefits. There is a requirement based on the company's level. Yes, they will have to get an actuarial valuation done. The actuarial valuation will come up with certain disclosures. Project unit credit method has to be followed. Based on that, there is life expectancy, etc., 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 which gets disclosed in the financial statement. The management says, no, we have parked the amount of provision. We've got an actuarial valuation done. Provision is done. So balance sheet is okay. Profit and loss is okay. There is no impact on profitability. There is no balance sheet impact, because amount which was proposed by the actuary, I have recorded in the financial statements. But if they do not disclose what is required under AS 15, then again, this is a disclosure misstatement. So 4 kinds of misstatements that can happen. Amount typically will happen if you work out a provision in a bank and you say this much be the provisioning of NPA. Bank says no different. That is an example of NPA. Depreciation. You have some working, they have some working. Your amounts are different. Classification, revenue and capital. Various other examples that can go. Presentation, Schedule 3, you feel it has to be in this. The client feels it is here. And disclosure. In your standards, in the Companies Act, there are certain disclosure requirements. And if in the financial statements that are prepared by the management, these do not agree, then these are all misstatements. You have to then understand them. These also include all the adjustments which, in the opinion of the auditor, can impact the true and fair view. And these misstatements also include those which are relating from fraud or error. So fraudulently, if the management has, for example, done some siphoning of funds, they have transferred some money to the related parties, and they do not want to disclose the related party disclosure as required by the accounting standard. This can also tantamount to a fraud that is being done on the company by the management. These are all misstatements. So misstatement of amount, of classification, of presentation, of disclosure, and which arise due to fraud and error are all categorized as misstatements. So I hope all of you have understood the definition of misstatement. It is all the differences that will arise when you are on field doing the field work of audit, and for different reasons there is a misstatement in the financial. What are uncorrected misstatements then? These are all those you have collected during the course of audit, but management has not corrected them. That is to say, management has not rectified. In the capital versus revenue expenditure, you go to the accounts officer, you tell the accounts officer, the chief accounts officer, this should be capitalized. He says, okay. He passes and records a adjustment entry, removes it from repairs and maintenance, puts it to capital. There is a put to use date, and therefore recomputes depreciation. P&L is okay, balance sheet is okay. Then it is not uncorrected misstatement because it has been adjusted. It was a misstatement, but it is no longer an uncorrected mistake. But for the depreciation example, like I gave you, there is a 10,000 rupee difference and the turnover of the company is 1,000 crores. The management says we do not want to adjust it. Those are uncorrected misstatements. What do you do for this? This one single chart in front of you will throw the entire process that is required under SA 450. As an auditor, you have to accumulate all the misstatements that are identified during audit. So, misstatement relating to amount, classification, presentation, disclosure, all have to be accumulated. This is where the documentation comes in. This is where I mentioned to you, your knowledge of accounting standards is extremely important. And those publications of the FRRB, which clearly state what are the non-compliances that are commonly observed by the institute in financial statements, go through them. I'll give you one example here. we review financial statements, and we see very commonly that we notice that we have seen the entire financial statements. We look at the notes to accounts, and what do we find? There is no note on borrowing cost. There is no note on valuation of inventories. I'll go by them one by one. Borrowing cost. And we ask, or then the inquiry is found, auditor feels and the management feels there was no capitalization of interest, and therefore we did not put a note on borrowing cost. Borrowing cost does not merely deal with capitalized interest. It also deals with interest debited to P&L. So you must mention how you have treated the interest expense. That should also be a note in your accounting policy as required under AS1. So borrowing cost, if there is a borrowing cost, either capitalized or charged to revenue, have a note, an accounting policy to it. Valuation of inventories. Sir, at the year end on 31st March, there was no inventory. Are Baba, the balance sheet is on date. The P&L is for the year. So during the year, you must have had inventory at some point. At year end, you have no inventory. But if there was during the entire year some inventory that you held, there must be a policy of inventory. And policy of inventory, so commonly I'm seeing inventory is valued at cost or market value. That's it, whichever is lower. No, it is not market value. It is net realizable value as given in AS2. And second, majority of small entities, non-corporate or the small companies, people don't even mention the method. That is the cost formula. Whether you have used FIFO, whether you have used weighted average, that must also form a part of your notes to accounts. That is your accounting policy, the AS1 requirement for inventories, that is AS2. Similarly, employee benefits. The standard was changed 10 years ago. It is not retirement benefits. People say we have no gratuity, no nothing. So I have no accounting policy on employee benefits. Employee benefits are short-term employee benefits, long-term. Long-term can be defined contribution, defined benefit plan. But short-term employee benefits, how do you treat salary? 12 months have been accounted for. If not paid by 31st March, provision was made. So the fact, how do you account for short-term employee compensation? That is also an accounting policy which must be disclosed. The standard does not deal only with retirement benefits. It was renamed as employee benefits because both short and long-term employee benefits are dealt with. Accounting for taxes on income, AS22. So many accounting policies don't have a note on that. If you do not have deferred tax, if you do not have deferred tax liability, it's okay. But if you have income tax liability, that is also covered by AS22. And you must have a note on AS22, for example. Another classic case, impairment of assets. Many of us, when we audit financials and the financial statements prepared by the management don't have a note on impairment. We do not qualify our report, or we do not say this is a disclosure misstatement. Please rectify. You should go to the client and say, have a note on impairment. Some of you may say, there was no impairment. The asset is valued at 10 crores in my books. If I sell it, I will realize more than that. If I don't, even if the production is there, my current cash flow value of that is far exceeding 10 crores. So not needed. Sir, impairment is not needed. But the standard requires management must test the assets for impairment. And the fact that the management is testing those assets for impairment, there is a huge property, plant, equipment which is there. There are machineries which the company has in its fixed asset schedule. Then you must have a note on impairment. You may not have an impairment expense. You may have only depreciation. But at least the fact that impairment has been tested on an annual basis by the management, that is a disclosure requirement, AS1 requirement that must be followed, and an impairment testing that must be done, that has to be identified. So I'm giving you basic examples of disclosure non-compliances. These are all easily available on the FRRB publications. Always refer to them. Ensure your audit team has sufficient understanding of these non-compliances, so that these are errors which we have as institute highlighted. We have seen them commonly occurring and red flag them that, dear auditors, please pay attention to these mistakes and ensure they do not happen in the financial statements on whom you are issuing an audit opinion. Therefore, your responsibility is one, accumulate misstatements which are identified in the audit, then determine whether audit strategy and audit plan needs revision. Because sometimes you may come across a huge misstatement and you may think that my entire audit planning and the strategy that was done will now have to go through a change. You are doing audit of a huge NBFC and suddenly you see thousands of crores of fraud that is there. Or for example, you are doing the audit of a diamond deer and you see that he has fled the country. There are certain bank guarantees that have been invoked. This will immediately force you to go back to your audit plan, your audit strategy, and change it. So these misstatements or frauds will determine whether you need to go back. If it's a small error, you may not go back to your audit plan. If management has detected and corrected a misstatement, like I said, if you find in the repairs and maintenance in your vouching, you have done sampling, and that sample, out of those, let's say some 3 samples that you selected, all 3 were capital nature, then you are expected to perform additional audit procedures, because these are clearly misstatements and then the management has also accepted them. You must also communicate to the management these misstatements and request for a correction. If the management refuses, 2 cases. One, it is not material. Fair enough, you may decide that my audit report does not need any change. If the amount is material, then you will have to consider your report under SA 700, where you are saying that the financial statements are free of material misstatement. That statement you may not be able to give easily anymore. Your SA 320, remember at the beginning I said this is an interplay of 450, 320 and 600. Materiality may change. You may have taken the threshold, the materiality on the basis of certain percentage. Now, if you see a lot of misstatements, you may want to bring down the materiality level. For a 1,000 crore company, you may have probably selected, let's say it comes down to 50 lakh materiality, like looking at assets, revenue, etc., etc. But you feel that no, now that I'm finding so many errors, 50 lakhs is also not an important threshold. It must be brought down to 20 lakhs. That will be determined. That is what the standard says. And finally, for the uncorrected misstatements, depreciation, you're working, client's working, there's a few thousand rupee difference, you may ignore. But accumulated all these differences in depreciation, in other expenses, in revenue capital, if you find there is something that is very clear that all of them put together becomes a material amount, then your audit report will change. But if they separately are not impacting, then you may not modify your audit report. You will communicate with those charged with governance and obtain a written representation. What do I mean with those charged with governance? It means that you are supposed to communicate with the board, not just the chief accounts officer. You communicated to them, they made the change, fair enough. But you are also required under the audit. So whenever you next time go to audit committee of the company and making a presentation to the board, always when you present to them, always also include the SA 450 requirements. What were the misstatements? What out of them, what was corrected by the management? What remains uncorrected? And out of what remains uncorrected, if they individually or together are not material, you can give a clean report. But if it's material, then a modification in audit report is required. Here, let me bring it to your attention. When you accumulate your misstatements, those which are clearly trivial, you may find that instead of 354, entry was of 345 rupees. 9 rupee difference, you are okay with it. These are all trivial errors. That is fine. But if there are misstatements, you must ideally categorize these statements in 3 parts. These misstatements can be factual, that is factual misstatements. They may be judgmental, or they may be projected. Actual means depreciation, you calculated, they calculated, actual numbers. Judgmental, you feel that no, this amount of debtors is not realizable and the management must provide certain portion of it. Management doesn't agree because these are different in your judgment. Those are judgmental misstatements. And projected is on the basis of accounting estimation. If there is an accounting estimate made by management and your accounting estimate, there are differences, then those are projected misstatements. Those are the three kinds of misstatements. And like I said, if you have to find that there are too much misstatements, you may have to possibly go back and change your audit plan and strategy. When do you do that? If there are chances based on your review, we reviewed the entire books to account and the ledgers, and there are a lot of misstatements. So you may find that there is chances that not only in the sample that I have selected, but in others, with the larger population also, there may be many misstatements or mistakes that may have occurred. Then you can go back, revise your audit plan, audit strategy, change the materiality, and also change your sampling. Therefore, in those cases, you have to revisit your plan, or else communicate. The standard expects that you communicate on a timely basis. Don't wait for the end of the audit to communicate. If you find out there's a mistake in the financial, misstatement in the financial, approach the person who's responsible, and if they are correcting it, let them record that entry. End of the audit, all misstatements have to be accumulated, and you have to clearly mention it to the management. Here, there is an exception. If it is prohibited by law or regulation, then you do not communicate with management. Question may arise, what is the situation? Let's say you are the forensic auditor of the company. Bank has appointed you as for forensic audit. Then you will not tell the client, for example, that please correct and rectify these misstatements. You will simply report it to the management or to the appointee. I'm sorry, not to the management. You will simply report it to the appointee, that is the banks. And therefore, those are not to be communicated. So if it is prohibited by law or regulation, then you don't. Otherwise, you have to communicate with the management. If they refuse, then understand what is the reason. They may say it's not material, no problem. But if it is clear-cut case, you see that entire debtors is to be provided. The company to whom the amount is receivable from has run away. It has been striked off. The management has disappeared, and you feel that no, entire amount must be provided for, and the client does not agree. Then you will have to take into account whether entire financials are free from material misstatement or it requires a qualification from you in the audit report. So these are the examples. You will have to, like I said, communicate with those charged with governance unless it is prohibited by the laws and regulations, and always seek a written representation. This was discussed in the previous presentation also, and I urge all the participants, always in your representation letter. What is the representation letter? Management is telling you, you are only reviewing a sample, but from the entire population, whether there is any uncorrected misstatement, which are material or individually in aggregate, that management must give in writing to you. And the summary of such items should be attached to the written representations. That must be in writing and must be communicated. You must document all of this. Like I said, if the amounts are trivial, identify them as trivial. All the misstatements relating to amount, presentation, disclosure, any fraud, if they are related to any of these, then also you must have to accumulate them and communicate. Like I said, if they are material in individual or all of them put together, modify your audit opinion. If not, you will have to document them. So this is what the SA 450 talks about with regards to the material misstatements. Due to the paucity of time, I had to skip a couple of slides, but I hope with the presentation and the allotted time that I was given to you, we were able to cover the importance of the various pronouncements of the institutes, the standards, the guidances, the other publications, which standard to apply in which scenario, audit standards, review standards, assurance standards, related service standards. Most importantly, the SA 450, which was to deal with the material misstatements, what is to be done from this. Thank you very much. I will hand it over back to you, Satish ji.
Thank you, sir. Just 1 minute, sir. By yeah, Chairman sir. Yeah. Chairman sir, we need to take up first question answers.
Yes, sir. Aniket, sir,
Yes, Chairman sir.
I just want
it's regular questions. So
Uh,
request you to just first one, sir. There is this. Can I read, sir, questions?
yeah, please go ahead. And Premnath ji is also here. Welcome, sir.
Premnath, sir, are you able to see the
Yes,
questions?
yes.
Yeah, first one, sir. There is some irregularity or some difficulty in conducting an audit, and we wish to resign. Do we have to compulsorily write something in our audit report, or if it is between the year, then whom to and how to we should communicate the reason for resignation?
So, in this regard, as you're aware, SEBI has very clearly for listed entities required the auditors to give a detailed explanation.
Yes.
There is a form that is required to be filed by the exchange whenever an auditor during the year is resigning from his position. If you look at the institute, we have come out with a very clear guidance on resignation of auditors. And we have stated that if you have been the auditors for 3 quarters, and then you in the 4th quarter, you will have to complete the audit, issue an opinion, and only then you may resign from your audit, the post of auditor. Even now under the MCA, this is the requirement. So to the gentleman who has asked this question, if you find that you are unable to perform your task as an auditor, you are not able to, for example, complete and in a position to obtain everything, you clearly will have 2 options in my understanding. One, you may issue a modified opinion. It can go to the extent of a disclaimer of opinion. Management did not comply with any of your requirements. Documentation or supporting evidence was not available at all. And all that you wanted to do for audit, management made it, or the circumstances were such that maybe the documents were seized and you were not able to do the work, then issue a disclaimer. If you want to resign, please have sufficient reasons recorded and then file those with the MCA and the SEBI.
Yes. Yeah. Can I move for next one, sir?
Yes.
If audit is not free from coercion from an audit client and it is difficult to report any fraud, then it's possibility to resign from an audit and without stating coercive reason. That means you don't want to say the reason and want to resign it.
Premnath ji, I would request you to please answer this and give the correct guidance, sir.
Coercion is if you doesn't have an independence, there itself you have lost. The independence itself is compromised.
Machaji,
So
that
the
is why
other-
if you look at, and I think Premnath, yeah, Premnath, sir, sorry.
Yeah.
So what I said is the other question, anyhow, sir, as Talati sir has already answered. So when you doesn't have an independence, there is no point in continuing it.
Yes.
And just to add to what sir has said, I think if you look at our code of ethics also, and now the proposed addition, the change, people ask, why do you want, if there is more than 15% fee from one client, why do you want us to disclose it with in our engagement letter and communicate it to the management? This is the precise reason where this is the international best practice, that as an auditor, I must not be threatened by risks. There are 5 risks. This is a clear intimidation risk. Intimidation risk means what? The client can intimidate me, coerce me, and he will say, if you don't do this, I'll take away the work. And that work is so material that my rosy roti depends on it. Then I feel impacted, my independence is hurt. But if I have 100 such clients and one person says, no, I'll coerce you, you can throw the file on his face and say, boss, nothing doing. This is what the opinion is going to be. Again, I was just use the firm, throw the file in a only a metaphorical way, not that physically you will file, but what I mean is you will have that courage of conviction to do it in that fashion.
Yes, sir. Thank you, sir. Daya, sir, do you want to add something? Yeah. Sir, next one, sir. During one of our audit, we observed that an inquiry has been initiated by the state government and FIR also lodged against the contractor. However, the corporation had not filed such FIR nor reported the same to our audit team. how to document and report the same. So documentation and how to report.
If the transaction, if you think that there is fraudulent involved in it, then accordingly you take to the logical conclusion. Because of that, is there any material misstatement happening? If not, you can leave it off.
Okay, because no information.
Also, what happened, Chairman, is basically now the legal legal expenses that need to be verified in certain cases, and professional fees which we are paying to lawyers and all that need to be found out. You are also asking a question with regards to how do I get to know. So
Yes.
in our case, like in our firm, whenever we take any assignment, we have a client continuance and acceptance checklist. In that particular thing, we need to fill up all the relevant data with relates to legal actions which are pending or initiated. So you have to go back and search some courts, or might be heads of expenditures and all, as much as possible. And apart from that, the last option is in the management representation letter. Again, if
Yes.
they are not giving you any information, that is another problem of the management. But you need to demonstrate that what you have done.
Yes, sir.
That makes difference.
And I think that's where the crux is. What you have done, thereby is right. What can a court case lead to? It can lead to a provision or a contingency as required in the AS 29. So what do I do to ensure and get comfort that yes, there was no provision contingency that exists? You scan through the legal expense, look at the nature, and in certain cases, it required seek confirmation from the law firm saying what was the nature of the transaction and if they foresee any financial liability, because the client will always say nothing, we will finish it, it will get settled. Tomorrow that one case can bring down the entire corporation. So
yes,
it's better that the legal law firm, there is a communication with them and the understanding is there.
Further, SA 240 says if someone is able to identify and there is a case, if you have to revisit earlier year financials, probably you may have to revisit the earlier year as per prior period accounting. You may have to go back and then you have to revise it. So that is one thing you have to look into. And then further, anyhow, Ankit sir's presentation, you have seen a very good detailed flow chart, process chart he has given, very well described. The total audit is involved in that process chart. What happens if you have identified? Put the questions into that chart, take it to the logical conclusion. Enough.
Yeah. Before going to next question, sir, I request both the speakers for PPTs, sir. And all the participants are requesting about the PPTs. I request all the speakers.
Right. I'll mail it to
tonight itself. I'll send, Chairman.
Thank you, sir. Sir, next one, sir. Normally, auditors sign the financial statements after the results declared on the stock exchange. Is it appropriate?
No, so my worry is which company can send the results to the stock exchange without auditor's signature. See, the audit committee will have to meet, so a signature will happen prior to the audit committee, and on conclusion of audit committee, within 15 minutes, the information disseminates to the stock exchanges. So I think if this is the case, I know of some places where managements agree to do an initial and then the final work happens, but there is at least an initial that gets done. And if the management has done that, please report it to the exchange. Without your signature, if they have the tenacity to send the results, tomorrow you don't know what all they can say as audited and send it across. I would, recommend
in that case,
extreme caution.
In the stock exchange matter, without the auditor report, which is your, limited review report or a final statutory audit report, it cannot be hosted also. So
upload will not happen.
Yeah, it will not happen.
Not happen, sir. At least they are taking nowadays with the digital signature. Next one, sir. Does identifying the effect of misstatements amounts to qualified report? Sir, Aniket, sir.
No, see, I discussed this. Yes. Misstatements are, like I said, can be relating to amount, can be relating to presentation, to disclosure, to any of those aspects, to the classification of the amount. Not necessarily all of them will be a material misstatement. If it's trivial, we leave it. Even if it is immaterial, below your materiality threshold, in that aspect, accumulated all these misstatements that you've identified, if it's not a material amount, You don't need to necessarily qualify your audit report. But what is essential is to communicate it with those charged with governance. So in the audit committee of the year end, have your presentation and mention that these are uncorrected misstatements, these are corrected misstatements, and your task is over, because these all documents, thereby you would have seen thousands of cases by now. He was the director of discipline. We've seen so many SFIO reports. These minutest things are what matters in the end. If you have disclosed, you have to prove that I did my task diligently. Then fraud, if the management has done, and if there were clear intentions to hide it and even hide it from US auditor, don't be afraid. I'm telling you, you may face for some time some challenges, but it is impossible then. But if you have been honest in your work and you have been honest in your documentation.
Yes, sir.
So, Chairman, other questions you can take it because it's already 8:10.
Yes.
So we can do the same practice of downloading those questions, taking the
Yes, sir.
responses if you think it appropriate.
Yes, sir. As of now, we are having further 10 questions, sir. We'll do one thing, sir. We'll take a replies from the speakers and we'll mail to them, sir. And we'll put it in all the replies. We'll do one thing there, way. We'll take a questions and with the replies, we'll put in our website. Along with our PPTs, we'll put there. That may be the better choice. Yeah, there, sir. Over to you for a closing remarks.
Yeah, thank you, Chairman. I think, Premnath sir, thank you very much for giving a very nice, comparable information and concluding with a lot of positivity in the entire approach. Positivity in the sense, what is the responsibility and duty of auditor is to be understood in true spirit, which Aniket Bhai also insisted. And that need to be demonstrated time and again. And Aniket Bhai, thank you very much for coming and talking. As you are a chairman of FRRB, I am fortunately the vice chairman of yours in FRRB, and we are seeing a lot of such issues which are happening. And you and Premnath sir coming together will make a whole lot of difference for us to really make our people understand. See, sometimes it is an ignorance, but ignorance always cannot be excused. And certain things need to be reported in a true spirit of the financial statement, and the word which is there, independent auditor, I think it means a lot. And what happens is, Premnath sir will agree, most of the procedure requires that, the financial statements to be completely done, and then only the audit should start. Right? That is a procedure which Reserve Bank of India, C&AG, is following. And they have a protocol that need to be maintained, that need to be demonstrated. And in case of listed entities, otherwise, we need to follow these protocols in a right spirit, so that what is found out post the financial statements are prepared, that will make a whole lot of difference. Thank you very much for both of you to come and join us and give your insightful thoughts. And more importantly, Aniket, Premnath sir, having people, till the end, which I think it's itself a beginning of a new era of this profession, because a lot of regulators are thinking from a different perspective. We have been doing certain things in a very good spirit, but sometimes being in good spirit is not the answer. Being with the right law is the answer. And that is how we need to conclude our financial statement and signing of balance sheets. Friends, tomorrow it's going to be one more interesting discussion which we are going to have. And we look forward for all your participation. And thank you both for giving us your time and energy to the entire discussion. Over to you, Chairman.
Thank you, Daya sir. Thank you so much. And first, I would like to say thank you, Dayabhai, only because he's instrumental in designing the entire program of the 4 days of this webinar. And he's a man who selected all the speakers also. Thanks for your wonderful support for an Hyderabad branch. And Aniket sir, love to hear you, and love to see you physical presence in Hyderabad once everything is got settled. Like to call you again for the physical seminar in Hyderabad. And always thank you so much for your wonderful time and effort here. And I know in the difficult situation also you joined with us, and you supported all the delegates with great knowledge. With a token of thanks, we would like to request you to accept our virtual certificate of appreciation from an Hyderabad branch. And this is for you, and we'll frame it, and we will send to you Ahmedabad for everything is got settled down.
Actually, the certificate not appearing. Yeah.
Yeah, thank you. So wonderful. It will be my my pleasure and honor. And like you said, I look forward to coming physically to Hyderabad.
Yes, sir. Yeah.
Thank
Yes.
you.
Thank you so much, Aniket sir and Premnath sir. Wonderful and powerful presentation. Thank you so much.
Thank you. Thank you very much.
Thank you,
Sachin-
Premnath sir. Really a pleasure to hear you, sir. Thank you.
Thank
Thank you,
you,
Mike.
sir.
Thank you,
Thank you.
Aniket. Thank you, Premnath sir.
Thank
Yeah.
you.
Thank you, Chairman.
Bye.
Bye-bye.
Dear
Bye.
delegates, thank you so much for joining. Let us join again tomorrow by 5 o'clock. Sharp, we'll start by 5.
Yeah.
Thank you all.
Thank you,
Stay
Chairman.
safe.
Yes, sir.
Thank you.
Yes, sir. Yes. You can, sir.
Yeah. Chairman, sir, I am winding up the session.
Please, sir, please.
Ram Kumar. Yeah.